Yes. Yesterday there was some technical issues at my end. So today, touchwood, since morning everything is going on fine. Okay. So we will start now. In the last lecture, we completed the discussion of allowances, not the entire part, but majority of the part we have completed in the last lecture. Okay. So in that discussion, we were doing HRA. Okay. So in HRA, we did one question also, and one question I gave you to try out at home. I hope you have tried it. Okay. And there might be some problem in that question. You must have faced those problems. Okay. So what I'll do, I'll start that question today. Okay. And after that question, what I'm going to do, I'm doing the balance part of the allowances. Okay. So pay attention now. So that question was question number 1 from your test your knowledge section. It was your question number 1. See this question. Mr. Mohit is employed with XY Limited on a basic salary of rupees 10,000 per month. He is also entitled to dearness allowance at 100% of the basic salary, of which 50% is included in salary as per terms of employment. Meaning that whatever basic you are getting, 100% of that you are getting as DA, of which 100% of your basic you are getting as DA, of which 50% is included in terms of employment, meaning that 50% is in terms DA, and the balance 50% will be not in terms. So if salary is 10,000, 100% of 10,000 will be 10,000. So you are going to get 10,000 rupees DA, of which 50% is in terms and 50% is not in terms. Okay. Next one. The company gives him HRA of rupees 6,000 per month, which was increased to 7,000 per month with effect from 1st January 2025. Meaning that I was thinking that the HRA for the full year is same. So I'll be able to calculate the HRA exemption for the full year. But now I cannot do, because my HRA amount has been changed from January. So I will have to do the calculations for December till December. For these 9 months, my calculations will be different, because for these 9 months, April to December, the HRA is 6,000. And from January onwards, I will have to calculate differently. I will have to do separate calculation because the HRA is changing. It is becoming 7,000. Okay. Next one. Yes, he also got an increment of 1,000 per month in his basic salary with effect from 1st February 25. So I was thinking that those 3 months, Jan, Feb and March, I'll be able to calculate together. But I cannot do that also. Even though for Jan, Feb and March, the HRA is 7,000, that is same. But friends, for those 3 months, my salary is not same, because my salary is changing from February. So what I'll be doing for the month of January, I'll be making separate calculations, and February and March, I'll be making separate calculations. Okay. Next one. Rent paid by him during the previous year 24-25 is as under. April and May, you have not paid the rent at all. Meaning that the first 9 months, when my HRA was 6,000, during those 9 months, I thought that I'll be able to make the calculation for these 9 months together. But I'll not be able to do that also. Because for the first 2 months, there is no rent paid only. That means for the first 2 months, entire HRA will be taxable. No exemption. Then at least from June till December, 7 months, I'll be able to do the calculations. But I cannot do that also, because from June month, I have started paying rent in Ghaziabad. Okay. And I am paying that rent till December? No. After December? No. I am paying that rent only till October. So June to December I'll not be able to do together. June to October I'll have to do together. Because from November onwards my rent is changing to 8,000 and the location is also changing to Delhi. Now they are asking you to compute gross salary assuming that he exercises the option of shifting out. Shifting out means 115 BAC not followed. If 115 BAC not followed, will I be able to get the exemption of HRA? The answer is yes. Okay. So after taking HRA, whatever taxable HRA will come, that taxable HRA plus basic plus DA total will give me gross salary. That I am supposed to calculate. But if they tell you that the assessee is not shifting out of 115 BSE, he is following 115 BSE. In that case, my entire HRA will be taxable, entire basic will be taxable, entire DA will be taxable. There will be no exemption of HRA. Total will be my gross salary. Getting my point? So what we are doing now? We are going to solve the question. We are going to solve the question and saying that the assessee is shifting out of 115 BSE, right? Pay attention. I'll make the computation. Computation of gross salary for previous year 24-25, that is assessment year 25-26 for Mr. Mohit, who is individual and nothing is mentioned, then he is ROR also. Okay, and he is not following 115 BSc, he is shifting out. Done. Assuming this, my gross salary is calculated. Now here I'll write particulars and here I will write amount. Pay attention. First one is basic salary. So can I say 10,000 per month is my basic, which I'm going to receive till January, till 10 months. Okay, no? So 10,000 per month for 10 months plus 1,000 rupees increment in the basic from February onwards. So from February onwards, my basic will be 11,000 per month into 2 months. So 11,000 into 2 will be 22 plus 1 lakh will give me 1,22,000 basic salary. This is taxable for this year. Now next one is my dearness allowance. Now dearness allowance is 100% of basic, no? It is 100% of basic. So can I say dearness allowance is given in terms as well as not in terms? So whatever is my basic, 100% of that is DA. And whatever is DA, out of that 50% is in terms. And that I'm going to receive for the full year. Yes or no? And the same calculation for not in terms also. Not in terms, 1,22,000. 100% of that I will get DA. And whatever DA I am getting, 50% of that will be not in terms for 12 months. So this will be 61,000 and this will also be 61,000. Now I will have to calculate HRA. And for that HRA, I will be doing a working note. Taxable HRA. Okay. I'll write taxable HRA rather. Taxable HRA. So this amount I will calculate from a working note and I will put that amount here and then I will total what I will get gross salary. Okay. So to get this gross salary, my taxable HRA should be correct. Okay. Now let's do the calculations for HRA. Please try and understand. Can I say February and March calculation can be done together? Why? because for these 2 months, HRA amount is same, 7,000. Salary is also same, basic DA incomes and turnover commission. Rent is paid in Delhi, amounting to 8,000. But I will have to do the separate calculations for January month. Why? HRA is 7,000 only. But the salary is different in January because salary is increasing from February. So till January, my salary will be different. Even though the rent is paid in Delhi, rent is also 8,000. But since the salary will be different for January, I will be doing the separate calculation for January. And anyways, I have to do the calculation for November and December separately. Why? Because for November and December, the salary is same. Whatever salary I'll be getting in January, I'll be getting that same salary in November and December. But don't you think my HRA amount was different here? From January it is 7,000, but for November and December, the HRA till December was 6,000 only. Hello, even though I was paying rent in Delhi, but my my HRA was different in these 2 months. Okay. And for June to October, I will do separate calculation. Why? HRA is same, 6,000. Salary is also same. Basic DA in terms turnover commission. But don't you think the rent amount is 6,000 only and that is paid in Ghaziabad? And from November onwards, I am paying rent in Delhi amounting to 8,000. So for June to October, my calculations will be different. Now, April and May, my calculations will be different because for these 2 months, I'm not paying any rent only. So I will write particulars. In the particulars, I will write HRA received. That is how much? 6,000, 6,000, 6,000, 7,000 and 7,000. These are all per month's amount, okay, no? And once I'll calculate, I'll multiply the number of months also. But these are all per month's amount. Less exempt under section 1013A. So whatever HRA is received, out of that I will take the exemption. A, B, C, whichever is lower. Okay. What is A? Actual HRA. What is B? 40% or 50% of salary. That I will have to take. Limit B. And limit C is rent paid minus 10% of salary. I'm not writing the entire stuff because of the limitation of space. Okay, no? Are you all understanding these three limits? You already know. Okay. So, lower of A, B and C will be my exemption. So this will be my exemption. I will call it B. And this is HRA received. I will call it A. Out of HRA received, I will take exemption. Whatever balance remain, that will be my taxable HRA. So how will I get this taxable HRA? I will do A minus B. A is HRA minus exemption. B is exemption. Yes or no? And I will multiply number of months over here. And then I will get the final answers. Okay. Now I will have to fill in the blanks. Ready everyone? First 2 months, this is not applicable. HRA exemption will be nil. Why? Because for first 2 months, there is no rent paid. So 6,000, there is no exemption. How much HRA taxable? Full HRA taxable for first 2 months into 2 months. 2 months. 6,000 into 2 will give me 12,000. So 12,000 taxable HRA for first 2 months of my previous year. Next one, June to October, actual HRA. It was how much? 6,000. Now June to October, I will take 40% of salary because the rent is paid in Ghaziabad, non-metro city. For that I need salary. So first I will calculate salary. salary for HRA exemption will be basic plus DA in terms plus turnover commission. So starting from April till December, my basic is 10,000. 100% of that is DA. 10,000 is DA also. But out of that only 50% is in terms, no? So only 5,000 will be DA in terms. And there was no turnover commission here. So salary from April till December, salary will be 15,000. And this will be the salary for the calculation of HRA exemption. And from January to March, my salary is increasing by 1,000, meaning my basic will be 11,000 and DA will be 11, but out of that only 50% is in terms. So 5,500 will be my DA in terms. This will be dash. So 16,500. Now I have to see that I am making the calculation for which months? June to October. So what is the salary for June to October? April to December the salary is 15. So definitely June to October salary is 15 only, no? Hello? So 40% I have to take 15,000, 40% of 15,000 I have to take. And that amounts to, fortunately, even that amounts to 6,000. Then, what is the rent I have paid from June to October? 6,000 rupees in Ghaziabad. Out of that 6,000, I will reduce 10% of my salary. Salary is 15,000, 10% of that 1,500. 6,000 minus 1,500 will give me 4,500. So what is the lowest amount? 4,500, that will be exempt. So out of 6,000, 4,500 exempted, how much will be taxable? 1,500, and this is taxable from June to October. How many months? 5 months. So for these 5 months, the taxable HRA will be 7,500. Getting my point? Likewise, I have to fill in the blanks. Sure. Come on, tell me. November to December, actual HRA is 6,000. And my salary is also same, 15,000. November to December, my salary is same, 15,000. But now I will not take 40%. Now I will take 50%. Why? Because from November, I have started paying rent in Delhi. So 50% of salary needs to be taken now. So 50% of 15,000 will be 7,500. So I will write 7,500 here. Understanding? Rent paid is 8,000 in Delhi. And 10% of salary will be 1,500. So 8,000 minus 1,500 will give me 6,500. A, B, C, whichever is lower, 6,000. So out of this 6,000, if 6,000 is exempt, how much is taxable? Nil. Nothing is taxable for 2 months. November and December. So taxable HRA for November and December will be nil. Hello? Now coming to January. January, my HRA is changing. So actual HRA is 7,000. Salary will remain same, 15,000. Rent is paid in Delhi. So 50% of 15,000, hello, will be 7,500. This will remain same. And rent paid minus 10% of salary, 8,000 minus 1,500 will be 6,500. Did you check only limit A changed? A, B, C, whichever is lower, 6,500. So can I say out of this 7,000, 6,500 will be exempted. 500 per month will be taxable only for the month of June, meaning for 1 month. So for January month, my taxable HRA will be 500. Now coming to February and March. February and March, HRA is 7,000. But my salary is changing. It is becoming 16,500. Now can you check? 16,500, I will do 50% of that. Why? Because for February and March also rent is paid in Delhi. So 50% of salary. But now the salary is 16,500. So 50% of 16,500 will be how much? 8250. Yes or no? Rent paid is 8,000 only in Delhi. But now 10% of salary will not be 1,500. 10% of salary will be 1650. So 8,000 minus 1,500? No. 8,000 minus 1650. That will give me 6350. Got it? Now lowest is 6350. So out of 7,000, 6350 will be exempt. 650 will be taxable. And this will be taxable for how many months, friends? 2 months. February and March. So 1300 will be taxable over here. Did you calculate the taxable HRA for all the months? Now can you add all of them? You will get 21,300. Please check. This is my taxable HRA. So in my gross salary, I will have to show how much? 21,300, and this is from that working note. Got it? Now can you add all the 4 figures? 244 plus 21, 265,300. Did you get it? 2,65,300 will be my gross salary. If this kind of question comes, will you be able to solve it? They've tried to make it complicated, but it is actually not complicated, very easy. So this way we are going to solve this question. Understood? Sure everyone? Shall I move ahead? Okay, now pay attention. Now we are coming to the next part of allowances. See, in your exempt category of allowances, we have completed fully exempt allowances. In partly taxable, partly exempt, we have completed HRA. Now we are in the partly taxable, partly exempt, but now we are going to do special allowances. And these special allowances are also exempt, but they are exempt under section 1014. Now out of these special allowances, certain allowances will be exempt based on the amount which is actually spent for the purpose for which the allowance was given. For example, if the allowance is given for traveling, so you are getting traveling allowance. So out of the traveling allowance, whatever amount you will spend for traveling, to that extent the amount will be exempt. If you spend the amount fully, entire allowance spent, entire allowance exempt. If part of the allowance is spent, part will be exempt, and the part which is not spent, that will be taxable. Hello sir. So there are 6 allowances here which are exempt under section 1014, but they are exempt on the basis of amount spent. And 6 more allowances are exempt under 1014, but the exemption for those other 6 allowances will be on the basis of limits which are prescribed in IT rules. There is one rule, Rule 2BB, Rule 2BB. As per this rule, there are certain limits which are given for these allowances. If to the extent of this limit you are getting the allowance, meaning the allowance received is this much or less, it will be fully exempt. But if the allowance received is more than this limit, then up to the limit the amount will be exempt, and any excess over and above the limit will be taxable. You are not supposed to see how much is spent. You are supposed to check what is the limit. So even if you don't spend these allowances, still you are going to get the exemption. Because the exemption does not depend on amount spent, exemption depends on limits provided in IT rules. I'm sure you are understanding this. Sure, no? So now tell me, which are those special allowances which are exempt under 1014, which are exempt based on amount spent? So we will have a discussion about those allowances. Come on, please check. See, now the employer is giving special allowances to employee. That part only we are doing in the note. Okay. So those special allowances will be exempt under section 1014 based on the amount actually spent. Okay. What are those allowances? Please check the names. 1, 2, 3, 4, 5, 6. If you see any of these 6 names, any of these allowances, you have to remember all these names. Hello? Whatever amount spent out of these allowances, to that extent the allowance will be exempt. If for example traveling allowance is there, and traveling allowance given 5,000 rupees per month. How much? 5,000 rupees per month. And if you spend 5,000 fully, how much will be taxable? Nothing. Because 5,000 received, 5,000 spent, nothing taxable. But what if you are receiving 5,000 and you are spending only 4,000? So out of 5,000, you could spend only 4,000, 1,000 remaining with you, no? That is taxable. But what if the allowance received is 5,000 and your expense on traveling is 7,000? Meaning that entire 5,000 spent, no? Entire 5,000 exempt. 2,000 extra you have spent. But are you getting that 2,000 from the employer as allowance? No. So you must have spent that money out of your pocket. And later on, from your employer, you will get a reimbursement for this 2,000. You will tell the employer that employer, see, for traveling you were giving how much? Only 5,000. 5,000 entirely spent. But extra 2,000 I have to spend from my pocket on official traveling. So give me that 2,000 back. So you will claim the reimbursement of that 2,000. So extra 2,000 spent on official traveling, you are getting reimbursement for that 2,000. That reimbursement is happening for official expense. That is not your income. Ignore that part. But tell me, 5,000 received, entire 5,000 spent, no? If 7,000 is spent, meaning entire 5,000 is spent, fully exempt. Extra 2,000 spent from your pocket, for that you will get what? Reimbursement. Will not be taxable as your income because that is a reimbursement for official expense. All these allowances which are there now, they are given to meet certain expenses of official nature. Traveling allowance will be given. Given for what? To meet the traveling cost which you might incur in the course of your employment. For your employers, to perform your duties, for your employer, you will have to travel here and there, no? You will have to go by train, you will have to go by bus, you will have to go by air. So for that traveling, you must be incurring traveling cost. You must be incurring ticket cost. So to incur that traveling cost, your employer gives you traveling allowance. Second allowance he can give you is the daily allowance. Which allowance, friends? Daily allowance. Daily allowance is given for the entire month together. See, the name is daily allowance. That does not mean it will be given on a daily basis. It will be given on a monthly basis only, but the amount is given to meet your daily expenses which you might incur in the course of your employment. Some Xeroxes are to be taken, some stationery has to be purchased, yes or no? Or for example, some couriers are to be done. There are many small petty expenses which you have to meet in the course of your employment. To meet such expenses, your employer might give you an allowance. So the allowance given to meet your daily expenses happening in the course of employment, that is known as what? That is known as daily allowance. Out of that, whatever you will spend, that is exempt. Whatever you will save, that is taxable. Done? Next one is conveyance allowance. Now, many people find it difficult to, differentiate between conveyance allowance and traveling allowance because both appear to be same only. Even if you are not able to differentiate, there is no problem because the tax treatment for both of them is same only, no? Even you are getting conveyance allowance, whatever conveyance allowance you will get, out of that how much you are spending, that will be exempt. How much will be saved will be taxable. And for traveling allowance also, the tax treatment is same only, no? So in terms of tax treatment, there will be no problem only. Understanding? Hello? But wait. Tell me, the traveling allowance is given to meet the cost of traveling incurred in the course of employment. Whereas the conveyance allowance is given to meet the cost of repairing, petrol, diesel, etc., which might be incurred on the vehicle. So there are certain expenses which might be incurred on the vehicle which is used to perform official duties. So there might be a vehicle, for example, motor car is there. For example, scooter is there. For example, motorcycle, etc. is there. That is a conveyance, meaning vehicle. Conveyance means what? Vehicle. And this conveyance, this vehicle is used to perform your official duties in the course of employment. Yes or no? But on this vehicle also, there are certain expenses, repairing expenses, maintenance expenses, plus petrol expenses, diesel expenses. To meet such expenses happening on this vehicle, this allowance is given, known as conveyance allowance. Did you get the difference? Yes or no? Sir, I will forget it. Forget it, no problem. Tax treatment is same for both of them. Sometimes the conveyance allowance can be given by different names. Sometimes they will give you motor car allowance. Sometimes they will give you diesel allowance. Sometimes they will say that petrol allowance is given. Sometimes they will say scooter allowance is given. All these are the names given, different names given to conveyance allowance. So you are supposed to understand that these are what? Conveyance allowance only. You are supposed to give the treatment of conveyance allowance for these allowances. Getting my point? Everyone? Now next allowance is academic or research allowance. Now this type of allowance is given to the employees so that employees get the money to get themselves educated, get some knowledge. See, to perform your duties, you must be, required to learn something, read something, study something new. Only then you are able to perform your duties properly, efficiently. So in the course of employment, to perform your duties, you might have to learn something, you might have to study something, you might have to research something, yes or no? So to get all those things done, your employer will give you money, academic allowance or research allowance. Out of that money, spend the money on your learning, spend the money on your studies, education, yes or no? And whatever money you will spend, from that you will learn something new which will be used for performing your duties only. Getting my point? So academic or research allowance can also be given. Now there is helper allowance. Sometimes it might also happen that the employee is there. This employee is overburdened with the work. He has only two hands, two eyes, two legs, one body. With this one single body, he cannot do such huge amount of work, because sometimes it might happen that during the previous year, during the financial year, there are certain months in which there is huge work on a particular employee. Or it is possible that some part of the month there is huge work, but you are not able to do it on your own alone. You might require someone's help. So employer is telling you that, see, even we know that you are overburdened with a lot of work, but to help you, we are not going to keep a new employee who will be working under you. No. The work which is allotted to you, you have to complete that work. But in order to get that work done efficiently and fastly, even you might require someone's help. So take a help on your own. Take a helper so that the helper can help you to perform your duties. And to keep that helper, no, we are giving you a fixed amount on a monthly basis. That is known as helper allowance. There might be possibility that uniform allowance is also given. Many organizations, many companies follow a system of wearing uniform. So it was the requirement of the employer that I should come in uniform. So give me the money to make uniform. Give me the money so that at least I can make 2 or 3 uniforms, so which I can, which I can use for the week. And laundry expenses will happen. So to meet such laundry expenses also on that uniform, give me some money. Because it is your requirement that I should come in a particular uniform. I could have come on in my own clothes also. But if you are saying that I should come in a particular uniform, then please give me the money to make that uniform as well as maintain that uniform. That money is given in the form of what? Uniform allowance. Nothing will be asked that what is the meaning of these allowances. Okay, no? Just remember the tax treatment. traveling allowance, daily allowance, conveyance allowance, academic or research allowance, helper allowance, as well as uniform allowance. If any of these 6 allowance you are receiving, whatever allowance received, out of that, whatever amount is spent, to that extent, the allowance will be exempt under section 10(14). If the allowance entirely spent, entirely exempt. If part is spent, part will be exempt. The balance which is not spent will be taxable. 10 subsection 14. Will you remember? Now, can you see a small table below this? This is traveling allowance, daily allowance, conveyance allowance, academic or research allowance, helper allowance, and uniform allowance. For all these allowances, you can take the exemption under section 10(14), provided you are shifting out of 115 BSc. If you are not remaining in 115 BSc, you are shifting out. You are not following default tax regime. Then all the 6 allowances you can claim as exempt based on amount spent. But if you are not shifting out of 115 BSc, you are staying in 115 BSc, meaning you are following 115 BSc, then only the first 3 allowances will be exempt. The other 3 allowances will not be exempt, it will be taxable. Meaning that academic or research allowance will be fully taxable, helper allowance will be fully taxable, and uniform allowance will be fully taxable. But the first 3 allowance, traveling allowance, daily allowance, and conveyance allowance will be fully exempt. Will be exempt on the basis of amount spent under 115 BSc also. Getting my point? So can you see? I have put 2 different colored strokes over here. Two different color stroke here. If you don't follow 115 BSc, if you follow 115 BSc. If you don't follow 115 BSc, you follow 115 BSc. If you don't follow 115 BSc, you follow 115 BSc. You are eligible to get the exemptions. But can you see only one tick? If you don't follow 115 BSc, only then you are going to get the exemption. But if you follow 115 BSc, you are not going to get any exemption for these 3 allowances. Remember this thing in mind. Very important. Will you? HRA exemption is available if you don't follow 115 BSc. But if you follow 115 BSc, HRA exemption is gone. Like that. These 3 allowances will not be exempt if you follow 115 BSc. Got it? Now there are some other special allowances which are exempt under section 10(14) only. But now these special allowances will be exempt on the basis of limit prescribed under IT rules. And what is the rule under which the limit is prescribed? The rule is Rule 2BB. Which rule, friends? Rule 2BB. Kaushik, you are required to keep your video on. Okay. So throughout the lecture, video should be kept on. Okay. Throughout the video. Sure? Okay. Please pay attention. Now, there are 6 more allowances. One is children education allowance. Second is children hostel expenditure allowance. Third one is running allowance, sometimes also known as outstation allowance. Next one is commutation allowance, also known as transportation allowance. Then there is one allowance known as underground area allowance, also known as mining area allowance. And one is tribal area allowance, also known as scheduled area allowance. These are different names. Tribal area means scheduled area. Scheduled area means tribal area. Underground area means mining area. Mining area means underground area. Hello? Running allowance means outstation allowance. Outstation allowance means running allowance. 2 different names for same type of allowance. Yes or no? The name can be this also. The name can be this also. Commutation allowance, transport allowance. One and the same thing. Because there are 2 different names given to a single type of allowance. Yes? Now, first of all, if you are getting children education allowance, if you have children, and to meet the education cost of your children, your employer might give you some allowance known as children education allowance. Firstly, this allowance is given to meet your personal expense. Hello? This should not be exempt only. But still, income tax rules is giving you 100 rupees per month per child exemption. That whatever allowance is given to you, if the amount is 100 per month per child or less, it will be fully exempt. But if the children education allowance you are receiving is more than 100 per month per child, then up to 100 it will be exempt. Excess amount will be taxable. And that you can do only for two children. Only for two children 100 rupees can be exempted. For every other children, whatever allowance you are getting, that will be fully taxable. For that 100 per month per child will not be exempted. So for example, you have only one child. For that one child, your employer is giving you 300 rupees per month for that one child. How much will be exempt? 100. And the balance 200 will be taxable. You could claim rupees 100 exempt for this one child, no? What if you have two children and for both the children the employer is giving you 150, 150. 100 will be exempt, 100 will be exempt, 50, 50 will be taxable for these two children. What if you have four children? For all the four children, the employer is giving 150, 150, 150, 150. First two children, any two children, 100, 100 exempt, 50, 50 taxable. And for other two children, entire 150, 150 taxable. Getting my point? Allowance you are getting only for one child. So claim exemption for one child. Allowance you are getting for two children. Claim exemption for two children. Allowance you are getting for more than two children. Claim exemption for only two children. Hello. And for those two children also, the exemption will be up to 100 per month per child only. Meaning that any amount which you receive more than 100 for those two children, that amount will be taxable. But up to 100 it will be exempt. Tell me, if you are receiving only 90 rupees per month for one child, entire 90 will be exempt. You cannot claim 100. 100 is limit. Amma, understanding? 100 is limit. But are you getting 100 or less than that? Less. So claim the entire amount as exempt. Because that is within the limit of 100. Getting my point? But sometimes they might tell you 450 per month for three children. How much, Kaushik? 450 per month for three children. That means this 450 is not for each child. 450 per month for three children. For all the three children, 450 is given per month. Out of that, 150 is per month per child. Be very careful, huh? Whenever you are reading these kind of things. 450 per month for three children, meaning that for every children 450 is not given. For these three children, per month 450 is given. So how much is for every children? Every child? 150, 150, 150. 450 for three children. Out of that, 150 for one child will be fully taxable. 150, 150 for two children, no. Only 100, 100 will be exempt. 50, 50 will be taxable for two children. Getting my point? This is children education allowance. Limit is 100 per month per child, and for maximum two children you can claim the exemption. For how many children your employer can give you the allowance? No. Employer can give you the allowance for as many children as he wants. But the exemption will be available only for two children. Got it? Now, the same type of exemption is given for children hostel expenditure allowance. So you have sent your children to the hostel. So to meet the hostel expenditure also, your employer might give you some allowance known as children hostel expenditure allowance. That will not be exempt 100, that will be exempt 300 per month per child. And the exemption is available for two children only. Getting my point? Sure. Next allowance is running allowance or outstation allowance. See, this allowance is given to employees of transport sector. Meaning the employer is in the business of transportation. So employee is the employee of transport sector. Getting my point? Employer must be in the transportation business. Employer must be in the transportation business. And you are running the vehicles of the employer. Meaning that, for example, I'm a very huge transport company. Many trucks and lorries are there. And you are one of the driver or cleaner in my trucks. So whenever my truck will go to outstation, whenever you will be running my trucks, there might be some expense happening. Because see, you are going from Chennai to Delhi, taking the truck. It will usually take 3-4 days. Yes or no? So during these 3-4 days, when you will be running the vehicle, when you are taking the vehicle outstation, there might be some expense happening. Like you will stay somewhere, you will eat somewhere, there is some small minor breakdown of the vehicle, you will get it repaired, some toll taxes will come, toll booths will come, you will pay the toll taxes also. Yes or no? There are lot many expenses which might be incurred on a daily basis while you will be running the vehicle. So to meet all such expenses, when you are taking the vehicle outstation, when you are running my vehicle, this allowance is given. So this is usually given to employees of transport sector. So if you are an employee of transport sector getting this type of allowance will be exempt to you under section 1014. How much exemption you will get? 70% of the allowance received or 10,000 per month, whichever is lower, that will be exempt. So first take 70% of the allowance which you are receiving. Whatever allowance you are receiving, for example, you are receiving 20,000. How much you are receiving? 20,000. Take 70% of that. 14,000 or 10,000 per month, whichever is lower, that will be exempt. Hello? So 14 or 10? 10. So out of the 20,000, 10,000 will be exempt. Understanding? But this exemption will be available only if you are receiving this allowance as the employee of transport sector and you are not in receipt of daily allowance. Because daily allowance is also given to meet such type of expenses only. Hello? And bloody, if you are getting daily allowance for which you are claiming exemption on the basis of amount spent, then you should not be getting this allowance. And still you are getting this allowance, will not give you exemption. This will then be fully taxable. So in order to claim this exemption, what you are supposed to do? You must be the employee of transport sector and you are not receiving any daily allowance. Only then this allowance will be exempt to you. Understanding? Sure everyone? How much exemption you will get? 70% of the amount received or 10,000 per month. You are not supposed to do per month per child over here. Huh? That is for children education allowance, children hostel expenditure allowance. Here you are supposed to take 10,000 per month. Okay? Understood? Next one. Now you are going to get transportation allowance or commutation allowance. Now see, somebody will say, sir, commutation or transportation, sir, conveyance, sir, traveling, these are very confusing terms. I think that all of them are same only. Listen to me very carefully. For performing your official duties, meaning in the course of your employment, you have to go to different places. For example, you are going from Chennai to Delhi. Sometimes you are going from Chennai to Mumbai. Sometimes you are going to Chennai to Hyderabad, Bangalore, Mangalore, Madurai. Many places you are visiting for the purpose of performing your official duties. In the course of employment, you are performing some traveling. So to meet that traveling cost which you are incurring in the course of your employment, this traveling allowance is given. Exempt on the basis of amount spent. Now there is some vehicle which is used to perform your official duties. In the course of employment, to perform your official duties, some vehicle is used. Motor car is used, scooter is used, motorcycle is used. To meet the expenses of those conveyance, to meet the expenses of that vehicle, running expense, maintenance expense, petrol expense, diesel expense, hello, an allowance is given. That is conveyance allowance. But this commutation or transport allowance is altogether a different allowance because see, this is your house. Here you stay. And this is your office. You come to work. Okay. Kani, where are you from? Where are you from? Write down. Chengalpattu. Okay. This place is little away from Chennai. How many kilometers? 40 kilometers approximately. Yes or no? You are staying in Chengalpattu and you will be coming to Chennai to your office. You will stay here. After the work is over, you will go back to home. This 40 kilometers traveling every day to and fro is known as commutation, commuting. This is known as transportation. Office to house, house to office. And sometimes this distance is a little bit more. So the cost incurred on this traveling, cost incurred in commuting between house to office and office to house, this allowance is given. Got it? Fully taxable. What did I say? Fully taxable. But if you are a handicap employee receiving this allowance, only then you will get the exemption. 3,200 rupees per month. So if the allowance is given to handicap employee, which employee? Handicap employee, and the handicap employee is receiving this allowance up to 3,200 per month or less, it will be fully exempt. But if that handicap employee is receiving this allowance more than 3,200, what will happen? Come on, tell me. Up to 3,200 exempt and the balance will be taxable. Meaning that the exemption is not given to normal employees. Deaf, dumb, hands are not there, legs are not there. No. Normal employee. Perfectly normal. Are you getting commutation allowance, transport allowance? Yes or no? Yes. But you will not get any exemption. That will be fully taxable. Understanding? Next one is underground area allowance, mining area allowance. So when you go and work in undergrounds, no, in mines, etc., you are paid a little more amount as a compensation for extreme working condition. That is known as underground area allowance or mining area allowance. If you are getting 800 per month or less, it will be fully exempt. But if you are getting more than 800 per month, 800 will be exempt, the balance will be taxable. Getting my point? Sometimes you are going to get tribal area allowance, scheduled area allowance. Tribal areas or scheduled areas are those areas which are very far from the population. You cannot even see animals. Forget about humans. And you are going to work over there. Extreme situations, no? So in those situations, in order to make you work in such type of areas, this allowance is given as a compensation. That go work in tribal area, we'll give you some more amount. But that tribal area, if 200 per month is given or less given, fully exempt. But if more than 200 per month is given, 200 will be exempt, the balance will be taxable. Yes or no? Now, can you see, I have put two dash only at one place. That if you are following 115 BSc or you are not following 115 BSc, don't worry, this allowance will be exempt. So only transport allowance or commutation allowance received by handicap employee will be exempt if you are under default scheme or you are shifting out of default scheme. All the other allowances will be fully taxable if you are following 115 BSc. So this exemption, these limits will be applicable, exemption will be available only if you shift out of 115 BSc. Getting my point? See, I have written 1, 2, 3, 4, 5, 6. For all these allowances, you will get the exemption if you are not following 115 BSc. But if you are following 115 BSc, you will get the exemption only for the fourth one, transport and commutation. All the other allowances will be fully taxable. Now the allowances which we had discussed right now, all these allowances will be exempt. All these allowances will be exempt based on the limits prescribed in IT rules. Is it necessary to spend money out of those allowances to get the exemption? No. So even if I don't spend any money out of those allowances, still I am going to get the exemption to the extent of the limit. Even if I spend some amount out of those allowance, I am not going to get the exemption to the extent of amount spent. I am going to get the exemption to the extent of limit only. Hello? So amount spent becomes irrelevant. Ignore that amount spent out of these allowances. That will be relevant only in case of these six allowances. These six allowances. Hitting my point? Sure. So these six allowances, if amount received is 2000, you have spent 1500, how much will be exempt? 1500, 500 will be taxable. 2000 received, 2000 spent, how much will be taxable? How much will be exempt? 2000. Nothing will be taxable. 2000 received, you are spending 2500, how much will be exempt? 2000 will be exempt. Extra 500 you have spent, no, that you are going to get. Extra 500 you are going to get as what? Reimbursement. And that reimbursement is for official expenses, will not be treated as your income, forget it. So 2000 received, spent 2500, exemption will be 2000, full amount. Extra 500 claim as reimbursement, that will not be treated as your income, forget it. Got it? Here you will see what? Amount spent. But here in these six allowances, yes or no, you are not going to see any amount spent. Even if the amount is not spent, you are going to get exemption. How much? Maximum this much. Even if you spend the amount, forget the amount spent, ignore that, you are going to get the exemption to the extent of limits only. Sure. First three allowances exempt in both the regimes. Last three allowances exempt only if you shift out, taxable in 115 BSE. Yes or no? Fourth allowance, here, fourth allowance, exempt in both the regimes. Understanding? But allowance other than 4 will be exempt only if you shift out, will be taxable fully if you are under 115 BSE. Done? Please don't forget this. Very, very, very important. Understood? Now, will you remember the names of these allowances? These allowances along with limits. Will you remember? How to remember these? T, D, C, A, H, U, and make some key. If you will do it now, right now you will remember the key also, and remember D stands for daily allowance. Right now. But after a few days, you will remember the key, but you will forget what D stands for. D stands for daily allowance actually, but that time you will recollect D is dearness allowance. Getting my point? So don't make a key out of this, because from T, traveling allowance is there, no? T for telephone allowance is also there. T for telephone allowance fully taxable. Amount spent ignored. Hello? So right now you will remember in this key, T stands for what? Traveling allowance. After few days you will forget only what T stands for. So remember the full name. And to remember this name, you will have to make a story. Make a story and remember the name. You have to close your eyes and you have to think that, okay, I am traveling. I am traveling daily. I am traveling daily in a conveyance. Now assume a conveyance. Conveyance can be a motor car also. Conveyance can be scooter also. It can be whatever conveyance which comes in your mind. Assume that. I am traveling daily in a conveyance. I am traveling daily in a conveyance with any academic or research helper, and we both are in uniform. Done. Traveling daily in a conveyance with academic or research helper, and we both are in uniform. Done. These six names remembered forever now. Now, these six names. Children, children. Two children. What children does? Sir, running. Children always run, no? So, Children, two children. Running and commuting. Where? Underground in tribal area. That's it. Children, two children. Running and commuting. Where? Underground in tribal area. Done. 6 names remembered. My ultimate intention is to remember these 6 names. That's it. Okay. Now see, apart from these 6 allowances, no, which are written here, under section 1014, based on maximum limit, I have told you 1, 2, 3, then 4, 5 and 6. These 6 names I have given. Apart from these 6 allowances, there are other allowances also, which are prescribed in Rule 2BB and for which the limits are also given. But trust me, those allowances are not relevant as far as examination is concerned. Practical question point of view, those allowances are never asked only. High altitude area allowance, border area allowance, island duty allowance. Getting my point? There are many other allowances similar to these allowances. Now, these type of allowances are usually given to the members of armed forces who are posted in extreme conditions. Siachen Glacier, army officers are there working over there in Siachen Glacier. They'll get high altitude area allowance. Few army officers, few navy officers are posted in Lakshadweep, Andaman, island duty allowance. Few of them will be posted in very disturbing areas, terrorism, terrorist areas, border areas. They will get border area or disturbed area allowance. These type of allowances are also exempt, and for them limit is also given under 2BB. But these type of allowances are never asked in the exam, because these type of allowances will be given to normal employees or special type of employees, armed forces members. So if in the exam they will tell you to calculate the salary of the army officer or he is a member of armed forces, compute the salary income for this, only then you will see such kind of allowances in this question. No, they don't ask the salary income for these kind of people. They will ask the salary income of an employee working in X Limited. An employee working in X Limited is never going to get border area allowance. Employee working in X Limited is not going to get high altitude area allowance. Getting my point? So these type of allowances automatically become what? Irrelevant for you. Even if you want, in your study mat, no, you will get these allowances. Just read them once. That's it. Don't even try to remember them. But at least remember these 6 names out of all those allowances which are prescribed in Rule 2BB. Remember these 6 names because these are frequently asked in the questions. Getting my point? Sure. Allowances done. Done. Nothing remaining. So very important part of this chapter known as allowances that we have completed. Okay. Now pay attention. Under allowances, no, we did one entertainment allowance if you remember. So if you are a government employee getting entertainment allowance, there are 2 effects. First, make it taxable and then take the deduction under 16 clause 2. But that deduction will be available if you follow, no, if you shift out of 115 BSc. But if you follow 115 BSc, 16 clause 2 entertainment allowance deduction is also not available. And for other employees who are non-government employees, forget about this deduction also. Only the entertainment allowance will be taxable, no deduction under 16 clause 2. So is it the only deduction under 16 which you are going to get, or other deductions also you can get under section 16? You can get 2 more deduction under section 16. One is standard deduction and the second one is deduction for professional taxes or employment taxes also. Getting my point? So you will get standard deduction. Whether you follow 115 BSc or you don't follow 115 BSc, this deduction will always be available. But if you follow 115 BSc, you will get a standard deduction which is 75,000. But if you shift out of 115 BSc, So while calculating your salary income, the standard deduction will not be 75, it will be only 50,000. Done. But this is available if your gross taxable salary is more than this amount. Huh? What if your gross taxable salary itself is less than 75,000 or 50,000? Are you still going to get 75,000 or 50,000 standard deduction? No. Then your standard deduction will be restricted to the extent of your gross taxable salary. For example, you are not following 115 BSc, meaning you are going to get 50,000 standard deduction. This year your salary is 5 lakhs. How much standard deduction will get? 50,000, because your salary is way more higher than standard deduction. So 50,000 fixed you are going to get. But what if your this year's salary is only 30,000? Are you still going to get 50,000 standard deduction? No, you will now get only 30,000. So your standard deduction will be restricted to the extent of maximum, your gross salary, gross taxable salary. If your salary is more, you will get standard deduction only 30. If your salary, gross salary is less than 50, whatever is your gross salary, claim that as your standard deduction. The same logic applies when the standard deduction limit is 75,000. Same logic applies. Got it? Hello? Because to earn salary, no, usually you don't incur any expenses. See, to earn business income, you have to incur many expenses. So those expenses are allowed as a deduction in PGBP head. To earn other incomes, other sources income, you might incur many expenses. Those are allowed while you calculate IFRS income under the head IFRS. But to earn salary income, what type of expenses you are incurring? Tell me. No, there is no expense only which you might incur to earn your salary income. Because whatever you speak, your employer is giving you. If you will say that to go there, I have to spend money on my traveling, employer is giving you traveling expense. Employer is giving you commutation allowance. So virtually speaking, there will be no expense incurred only by you to earn your salary income. So why to give you any deduction also? But still, you should not feel that under other heads I am going to get deduction. I am not getting any deduction here. So don't worry, we are going to give you standard deduction. A fixed amount, notional amount, imaginary amount. This will take care of everything. Either 50 or 75 as the case may be. Got it everyone? Understood? Now the second deduction was entertainment allowance that we have already discussed. The last deduction, third deduction is 16 clause 3. And that talks about what? Professional tax or employment tax. Which tax? Professional tax or employment tax. See, if I say that professional tax or employment tax, it is a different type of tax. We are doing income tax. It is a tax on income charged under the Income Tax Act by the central government. Hello. What is GST? It is a tax on supply of goods or services charged by the central as well as state government together. Hello. What is custom duty? Custom duty is also a tax charged on import and export by the central government. What is stamp duty? Stamp duty is a tax charged by the state government on buying and selling of what? Land or building or any immobile property per se. Getting my point? So there are different things on which the taxes are charged by different governments. So if you are doing any profession or any employment in a particular state, for example, if I talk about Gujarat or if I talk about Maharashtra, Maharashtra is a state which charges tax on what? On the profession, on the employment which happens in that state. So if you are having a profession in the state of Maharashtra, if you are having your employment in the state of Maharashtra, on that profession, on that employment also, the state government charges tax. Saying that you are getting that profession in our state, you are getting that employment in our state, so we are going to charge tax on that profession, we are going to charge tax on that employment. Now, whatever income you will earn from that business, earn from that profession or employment, no, that income will be charged under Income Tax Act. and the tax will be charged by the central government. Out of that income, whenever you pay such type of taxes to the state government, no, under the Income Tax Act, you are going to get the deduction for these professional taxes. Hello? Understanding? Wait. I will make some small point. There is a profession, or you may say there is an employment. On this profession, on this employment only, the tax is charged. So a tax is charged on this, on profession it is charged, on employment it is charged. You don't want to pay this tax, don't do this profession, we will not charge. You don't want to pay this tax, don't do this employment in my state, we will not charge. But if you are doing this profession, on this profession we are charging tax. If you are having that employment in our state, we will charge this tax. Now this tax is charged by whom? By the state government. It depends state to state. Every state will have can have their own professional tax act. Maharashtra can have their own professional tax act. Gujarat can have their own professional tax act. According to the professional tax act of the respective state, the state will charge tax on the profession, on the activity of profession or the activity of employment in their state. Getting my point? Hello? Now from this profession, you are going to earn PGBP income. From this employment, you are going to earn income from salary. On this income, no, a different tax is charged. And that tax is known as income tax. And that income tax is charged by the central government under the Income Tax Act. Now, whenever you will be earning income from salary, from that income only you are going to pay the tax to the state government, no? Whenever you will be earning PGBP income, from that PGBP income only you are going to pay that tax to the state government, no? Hello? So from that income, take the deduction. Income Tax Act says that whatever salary you are earning, no? Hello, employee. Whatever salary you are earning, no? From that salary only you are going to pay your professional or employment tax, no? So out of your salary income chargeable under the head salary, no, take the deduction for the professional tax which you have actually paid to the state government during the previous year. Hello, sir. So income from salary chargeable under Income Tax Act. Under the Income Tax Act, when you will be calculating your salary income, out of this salary income, whatever tax you have paid to the state government in the form of professional tax, take the deduction of those taxes out of your salary income. Hello? Got it? But only take if it is actually paid to the state government during the previous year. If it is unpaid, it is outstanding, it is payable, yet to be paid, will not be allowed as a deduction. If from this year's salary income, you want to claim the deduction of professional tax, you are supposed to pay the professional tax actually in this year. Now don't see that to which year the tax relates to. Professional tax for the last year. Hello? You did not pay last year. So it was not allowed last year because it is allowed on payment basis. No. So was it paid last year? No. Was it allowed last year? No. It is paid in this year. So claim it as a deduction this year. Out of this year's salary income, take it as a deduction. This year's professional tax paid in this year, claim it as a deduction this year only. This year's professional tax, half paid in this year, half is paid in the next year. How much will be allowed in this year? Half. Balance half which is not paid in this year, even though it is for current year, will not be allowed in current year, will be allowed in the year in which it is actually paid. Understanding? Same logic we applied for municipal taxes also, no? Same logic we are supposed to apply here also. Got it, everyone? So these two deductions, will you remember? One is standard deduction, 16 clause IA, 1A, 50,000 or 75,000 as the case may be. Second deduction 16 clause 2. A, B, C, whichever is lower. Do you remember that? 1/5 of basic, actual entertainment allowance, maximum 5,000, whichever is lower. That will be allowed as a deduction, provided you are not following 115 BSc and you are a government employee. If you are non-government employee, so whether you are following 115 BSc or not following 115 BSc will not make any difference. You are not going to get deduction for entertainment allowance. 16 clause 3, professional tax. Paid in this year? Perfect. Don't see to which year the professional tax relates. It can be for earlier year, it can be for this year, it can be for next year, paid in advance in this year, it can be for any year. Whatever professional tax you have paid in this year will be allowed in this year. Hello? Sure? Whatever professional tax you have paid in this year will be allowed in this year. If you are shifting out of 115 BSc. But if you are not shifting out of 115 BSc, even this professional tax will not be allowed as a deduction. Got it? Sure? 3 deductions keep in mind. And these 3 deductions are to be claimed out of your gross taxable salary. Now, if we see that while calculating my gross taxable salary, I made one chart, small chart if you remember. Do you remember this chart I made? Small statement. What is there? Come on, tell me. Basic we have already done. Arrears we have already done. Advance salary we have already done. Bonus ex gratia is done. Fees commission is also done. Just now we completed this part. Allowances. This is also done. And I told you, this is important, this is important, and this is important. One important part we did. Now coming to the next part. What is that? We are not going to touch this right now. Later on. But first we will talk about what we are going to do this. See, perquisites are something which you get while you are in service, while you are working. But when you stop working, when you retire at the time of your superannuation, on retirement now, after you get retired, you are not going to get these amounts. Will your employer keep on giving you basic salary? No, he will stop. Will your employer keep on giving you bonus, fees, commission, allowances? No, he will stop. He will stop giving you perquisites also. All these figures till perquisites you are going to get while you are in service. While in service, meaning that you are working till that time you are going to get these amounts. Out of that, only perquisite is supposed to be done. That we are going to do later on. But once you retire, once you leave your employment from the employer, now there are certain benefits which are supposed to be coming from the employer on your retirement or on your superannuation. Those benefits are known as what? Retirement benefits, superannuation benefits. So is it possible that during the previous year, you are retiring? So this year your employer can give you these retirement benefits also, for which we are going to discuss now. What type of retirement benefits he can give you? Hello, sir. Okay. So one by one we are going to discuss. And once the retirement benefits are over, then we are going to go to perquisites part. Sure? Okay. Can you see gratuity? Can you see pension? Leave encashment? Then there is provident fund, approved superannuation fund. Then retrenchment compensation and VRS. Basically, these 5 things are retirement benefits. But we are doing 2 more things along with retirement benefits, because these 2 amounts are also received while you leave the employment. Either you are thrown out, retrenchment, or you voluntarily throw yourself out, voluntary retirement. So when you leave the organization voluntarily or you are thrown out, that time also some amount comes to you. Though it is not your retirement, normal retirement. But since you are leaving your job or you have to leave the job, as a result of that only these two amounts are received, which are known as profits in lieu of salary. We are going to cover these two figures also along with retirement benefits. Getting my point? And two points are there, provident fund and approved superannuation fund. Although they are retirement benefits, but we are not going to do here. End of this chapter, last concept we are going to discuss, provident fund and ASF. Once we are through with this two things, no, the chapter will be over. So first we are going to do gratuity, then we are going to do pension, then we are going to do leave encashment. Once these three things are done, we will not do PF and ASF right now. We will do the PF and ASF concept in the end of this chapter, at the end of this chapter. But two more things are there which are usually profits in lieu of salary. Those things we are going to cover with retirement benefits only. One is retrenchment compensation and another one is VRS compensation. Did you get it? How many things are to be done? In today's lecture, we are going to discuss all these things. Okay. Now pay attention. Before I move ahead, read this part properly because this talks about professional tax. Did you understand anything? See, when I told you to read this, no, if you are an employee, please try to visualize. You are an employee, I am your employer. I am supposed to give you 1 lakh rupees as your salary. How much? 1 lakh rupees as your salary. Out of that 1 lakh rupees, 2000 rupees professional tax. How much? 2000 rupees professional tax you are supposed to pay. Right now? So that can be paid by you by two ways. Either take entire 1 lakh rupees and from that 2000 pay on your own. So I gave you 1 lakh rupees of salary. From that 1 lakh you are paying 2000 as professional tax. First case, did you understand? Hello? How much will be your taxable salary? 1 lakh, because you are going to get 1 lakh from me. 1 lakh will be your taxable salary. Out of that taxable salary, have you paid 2000 rupees professional tax? Yes. Take the deduction for that professional tax. So 1 lakh taxable salary, 2000 professional tax paid will be allowed as a deduction. How much is your final taxable salary? 98,000. This is the same amount remaining in your hands actually also. How much salary will remain now in your hands? 98 only now. So under the head salary also 98,000 will be taxable. Got it? First case. Second case. I'm your employer. I'm supposed to give you 1 lakh rupees of salary. Tell me yes or no. But if I give you 1 lakh rupees of salary, no, you will spend that 1 lakh rupees entirely and you will not pay your professional tax. So what I did, From your 1 lakh only, I deducted 2000 rupees and paid to the state government. Understanding? And remaining 98 I gave in your hands. Will you go and again pay that 2000? Sure. So how much salary coming in your hands? 98,000. Done? Now let's do the tax treatments. How much is your salary? Am I deducting 2000? How much is the net salary? 98. Under the head salary, net salary will be taxable or gross salary will be taxable? Gross, no. Forget about professional tax right now. Whatever amount I deduct from your salary, after that I give you net. Is the net amount of salary taxable or gross amount of salary is taxable? Gross amount, no. So 1 lakh is the gross amount of salary, charge it. Out of this 1 lakh, which are showing taxable, 2000 was deducted, no? Deducted and paid as professional tax, no? Take that as a deduction, that's it. What will be the net taxable salary? 98. This is the same amount remaining in your hands. Hello? Are you understanding the tax treatments? 1 lakh salary. From that you pay 2000. What will be the taxable salary? 1 lakh. And take the deduction for professional tax. First case done. 1 lakh salary. Second case, 1 lakh salary. 2000 professional tax deducted. How much coming in your hands? 98. Done? How much will be the taxable salary? 1 lakh. Out of that, 2000 paid as professional tax. No, deducted and paid as professional tax. No, take the deduction of 2000. How much will be the net taxable salary? 98. That is the same amount remaining in your hands, coming in your hands after deduction. Hello? Understood, no? Third case, very important. Please remember. How much is your salary? 1 lakh. How much professional tax you are supposed to pay? Take this 1 lakh and pay. No, don't do that. I will deduct 2000 and give you balance. Right? No, don't do that. Take the 1 lakh entirely. Take entire 1 lakh. Don't pay. Don't pay. And see, even I have not deducted. You are getting your full 1 lakh rupees of salary. Yes or no? How much was the professional tax? 2000. State government. Employer paid on your behalf. You had to pay? No. Was it deducted from your salary? No. It is going from employer's pocket. So during this year, whatever benefit you get from your employer, total is your salary. So how much benefit you are getting from your employer? 1 lakh in your hands. And 2000 was your professional tax. You were liable to pay to the state government, paid from employer. Even this 2000 is your benefit given by the employer, no? So how much total benefit coming in this year from the employer? 1 lakh plus this 2000. So how much will be your taxable salary? 1 lakh 2000. Yo. And out of that 1 lakh 2000, 2000 is paid as professional tax, no? Take the deduction. How much net taxable salary? 1 lakh. And that is exactly the same amount coming in your hands. Got it? So if the question says that professional tax is paid by the employee, or the question says that the professional tax is deducted from employee's salary, anyways you are going to charge the tax, charge gross salary only, no? Either you pay or it is deducted from your salary. Anyways, your gross salary you are going to charge, no? Charge the gross salary and give only one effect. Take the deduction for this amount under 16 clause 3. Got it? But what if 1 lakh given and 2000 paid from my pocket, meaning that your professional tax paid by employer on your behalf? Is it a benefit other than salary, extra benefit I am giving? So that extra benefit of 2000, your professional tax paid by me is a benefit for you. will also be treated as your salary first. Charge this 2000 under the head salary. So now your salary will not be 1 lakh, the salary will be 1 lakh 2000. And out of this 1 lakh 2000 of salary, 2000 professional tax is already paid, no? Take the deduction for that 2000. Now you will give two effects. Don't forget to give these two effects. Huh? First, 2000 will be taxable as income. And now that will form part of your income, salary income. Now in your salary, this 2000 which is included, is it paid to the state government as professional tax? Yes, take the deduction for that. So it is as good as your salary is 1 lakh 2000. Out of that 2000 is paid as what? Professional tax. But for that 2000 you'll have to first show as your income. Will you be able to do it? So even this case can be there in the exam, or even this case can also be there in the exam. You have to be very careful which case is there. If first case is there, no need to do anything. You are going to charge gross salary, take the deduction, only one effect. Take the deduction for professional tax paid or deducted from your salary. Done. And what if this case is given in the question? Give two effects. Don't forget to give these two effects. First, charge the professional tax paid by the employer on your behalf under the head salary as your income. Now it will be shown as a part of your salary income. Now in your entire salary income, is this 2000 rupees of income paid to the state government in the form of your professional tax? Yes. Then take the deduction. Done? Sure. This cannot be made easier than this. Huh? Now, this is a summary of all the three deductions. Read it. Are you understanding anything from this? Please check. If you are not following 115 BSc and you are a government employee, are you going to get all the three deductions? Yes. And if you are a non-government employee, you are not going to get deduction for entertainment allowance, but other two deductions you are going to get, no? 50,000 and professional tax. But you are not going to get this deduction. Why? Because you are a non-government employee. But if you are following 115 BSc, then following 115 BSc, forget about these two deductions, take only standard deduction, and that is available 75,000. Whether you are a government employee or a non-government employee will not make any difference. Sure. Whatever you have studied, no, summary. That's it. Now, coming to the retirement benefits part, which is the first retirement benefit you can see? Gratuity. What is gratuity? Gratuity is a lump sum payment as a reward for long-term service. It is a way for employer to express appreciation or gratitude for employees' dedication and loyalty, may or may not be given statutorily. Read it once more. Read it and understand. This will not be asked in the exam. Don't worry. But you have to understand. Understand, forget. Remember the tax treatments only. What is basic salary? Is the examiner going to ask you? No. He is going to ask you the tax treatment. What is the meaning of allowance? Is the examiner going to ask you? No. He is going to give you different types of allowances, and he will ask you the tax treatment, whether it is taxable under the salary or not. If taxable, then how much? But why are you always telling the meaning, sir? See, listening to the meaning, no, sometimes help us to remember the tax treatment properly. Otherwise, the meanings are not important. Getting my point? This is gratuity. Gratuity as per section 17.1 is your salary. Do you remember 17.1 definition we did? The term salary includes wages, annuity, pension. Third point was gratuity. Then fourth was fees, commission, perquisite profit in lieu of salary. Fifth was advance salary. Sixth was leave salary, leave encashment. Seventh, eighth, ninth, 10th we are yet to do. We'll do it later on. So in your definition of salary, no, gratuity is considered as your salary. It is your salary. Although it is coming by the name of gratuity, but it is your salary because it is given to you by your employer. It is your salary. Now, when the government gives any salary by the name of gratuity, the government might give you the salary on the name of gratuity when he is very happy with you, because you have given long-term services to him and he wants to appreciate you for your long-term services. See, usually people don't stay in the organization for 2 years also. You have spent bloody 5 years in the organization. You have spent 10 years in the organization. I must appreciate that for this long time you were there with me. So for your loyalty, for your dedication, for your long-term services, your employer is very happy. And as an appreciation or as a gratitude, he wants to tell you thank you. But only thank you will not work. Along with the thank you, along with the gratitude, one payment will come. And that payment is known as what? Gratuity. Got it? Sure, everyone? Now this gratuity which you are getting, no, you can get this gratuity at 2 points in time. One, you can get the gratuity while you are working only. You are not getting retired. You are working only. At that time also you can get. What if the government wants to say thank you before your retirement while you are working? He can say thank you and make you the payment, no? He can show the appreciation at the time of your retirement also, and even before you are retiring. While you are serving, you have already completed 5 years. Retired or still working. But since you have completed 5 years, since you have completed 10 years, the employer will give you gratuity. Now this gratuity you are receiving while you are in service only. So remember, whatever gratuity which you receive while you are in service is as good as your salary only. This could be given in the form of salary, but it is not given in the form of salary. It is given in the name of gratuity. So this will be fully taxable. What did I say? Fully taxable. Any gratuity which you receive while you are in service will be fully taxable. Whether you are a government employee or a non-government employee will not make any difference. Whether you are following 115 BSE or not following 115 BSE will not make any difference. This will be fully taxable for you. But if you are getting the gratuity at the time of retirement, so now there is some gratuity which will become due. On the event of your retirement or on the event of your death, whichever happens earlier. So if you retire first, prior to your death, you are retiring before you are dying. So on your retirement, this gratuity will become due and will be given to you. This is prior to death, you are retiring and you are getting. Now it might be possible that your retirement is coming later on, but even before that you are dying. So on your death, this will become due and will be given to your legal heirs. So the gratuity which either becomes due on retirement or it becomes due on your death, whichever happens earlier, that type of gratuity is known as death cum retirement gratuity. And this is not a small amount, this is a huge amount. And just imagine, in the year in which you will be retiring, in that year, whatever salary for that year will be there, will be taxable. But this huge amount will be forming part of that year's salary. So just imagine your retirement year salary will be too much. And on that, there will be huge amount of tax which you are going to pay in the year of your retirement. Your retirement will be memorable or it will be miserable. It will be miserable. Because on your retirement, if you are going to get these amounts, in this 1 year only, your salary, taxable salary will be huge. If this entire amount is taxed, then your entire salary will be huge. So this year's salary, whatever you are receiving till the date of retirement, this year's salary is going to be taxed. But along with that, this huge amount will also form part of your salary and it will also be taxed, meaning that this year's salary will be huge, and as a result of that, huge taxes are to be paid in this year. So your retirement will become a little bit, sour for you. It will not be sweet, it will be sour. You will not have a good memory about your retirement, because in the year of retirement, entire retirement benefits got taxable. And as a result of that, huge amount of salary came in that year. Huge amount of salary became taxable in that year. And as a result of that, huge amount of taxes you have to pay in that year. Understanding? Wait now. So do one thing. Government is saying, don't worry. In the year of retirement, no, whatever gratuity you are getting, no, as death come retirement gratuity, that we are going to exempt fully. Go, fully exempt. But it will be exempt fully if you are a government employee. If you are a government employee. So if you are a government employee who is receiving what? Death come retirement gratuity. So death come retirement gratuity for a government employee will be fully exempt, and it is written under section 10, subsection 10. This is visible to everyone, friends? Visible, no? Fully taxable. Sorry, fully exempt. My mistake. Fully exempt. Got it? Hello? Now just imagine the death come retirement gratuity can be given to non-government employee also, no? So will they get any exemption? The answer is absolutely yes. Why not? If the government employees are getting the exemption, why should not we? We also should get the exemption. So government cannot give the exemption in a biased way. That okay, you are a government employee, you will get full, and you are a non-government employee, you will not get at all. Even we want the benefit of exemption. No, you should give the exemption to us also. But wait, giving the exemption fully to the non-government employees will be dangerous. Why? Think. Just imagine if gratuity for non-government employees was also fully exempt. What the employees would have started doing, 4 or 5 years before my retirement, me and my employer would have, agreed to some nonsense. I would have told my employer that employer, last 3-4 years, no, don't pay me salary only, or pay me very less salary. Peanuts. Increments you are supposed to give, don't give the increments also. For last 3-4 years, pay very less salary. That does not mean that the salary which I am supposed to get, I am leaving that. No, I am not going to leave that. Whatever salary which you did not give me right now, no, give me that amount in the form of gratuity. Because for non-government employees also, the gratuity is exempt. Everyone will start taking their taxable salary for last few years in this way. And this can be very well done if the employee is a non-government employee. A government employee cannot do this. He cannot go to the government and tell government, give me less salary for last 3-4 years. If you will give last few years, if you will give less salary, no, less amount will be taxable, and that amount give me in the form of gratuity. Government will give a tight slap to such kind of employee. Throw him out. Government is not going to pay you gratuity which you don't deserve. It will always pay you the gratuity which you deserve and which you are legally eligible to get, a genuine amount only. So whatever amount the government employees will get as a death come retirement gratuity will always be a genuine amount, has to be exempted fully. But it is not the case in the case of non-government employee. It can be a manipulated amount of gratuity. So giving the full exemption over here, just like government employee, will not be advisable. So we will give the exemption, but the exemption will be given based on what? Based on certain limit. To this limit, if you are getting, fully exempt. But beyond this limit, if you are getting, we will exempt to the extent of this limit only. Rest will be taxable for you. Got it? Now in India, no, there is one law. In India, there is one law. Name of the law is POGA, Payment of Gratuity Act. I guess, Kaushik, there is some network issue at your end. Are you all, can you all see the screen properly, or is it blurred? It is blurred? Ayyo. I am also looking blurred, or I am looking okay? I am also blurred. Give me 1 minute. Let me check the network first. Now check and let me know. Now okay? Still same. I'll continue. It will get okay within some time. Okay, Kaushik? I'll continue. I was not getting such kind of issues earlier. Last 2 days, no, these issues are creeping up. Please bear with me. Bear with me for some time. It will get okay within some time. I guess there is some network issues because of that only. Okay, no? But are you able to hear me properly? Okay? Okay. Pay attention. So there are two laws. There is one law in India. The name of that law is Payment of Gratuity Act. POGA means Payment of Gratuity Act. So under that law, if an employee gets covered, no, the employer has to compulsorily give him gratuity, because the employee gets covered under POGA. So now whether the employer wants to say thank you or does not want to say thank you, he will have to say thank you and give this gratuity, because the employee is covered by POGA. Usually those employees who have spent 5 years or more in an organization, no, they are usually getting what? Gratuity as per POGA. Understanding? So see, for government employees, you are not supposed to see POGA or not covered by POGA. Yes or no? If there is a non-government employee, ask that non-government employee, are you getting death cum retirement gratuity? That employee will say yes. Why? Oh, you got covered in POGA. And because of that, your employer is giving you gratuity. Oh, so your gratuity will be exempt under section 1010. Amount which you have received, maximum 20 lakhs, or amount which POGA says, which you should get as what? Gratuity. These three amounts you are supposed to take. One, actual gratuity which you are receiving. Two, maximum 20 lakhs. The gratuity exemption cannot be more than 20. So there is a limit of exemption, 20 lakhs. Yes or no? And the third, since you are getting this gratuity because you were covered by POGA, so there is something written in POGA also, no? Even that law also will say that how much gratuity you should get. So the limit which is prescribed under the Payment of Gratuity Act, which you should get as what? Gratuity. Limit prescribed under POGA. So these three amounts you are supposed to calculate. Lowest of these three amounts, no, will be the amount exempt out of your gratuity, and the balance gratuity will be taxable. Got it? Now under not covered by POGA. See, if you are a non-government employee, you are not covered by POGA, still your employer can say thank you and give you gratuity. Is it necessary that you should be covered by Payment of Gratuity Act? Only then I have to give you? No. If you are covered, then I have to compulsorily give you. But if you are not covered, I may give you voluntarily on my own. So still you are going to get that exemption. But now the exemption will not be, last limit will not be as per POGA, because you are not getting covered by POGA. Last limit we will tell you as per Income Tax Act. Getting my point? So first, actual amount. Second, maximum 20 lakhs. And third, now we will tell you the limit under the Income Tax Act, because that limit will not come from POGA since you are not covered by POGA. Getting my point? What is the full form of POGA? Payment of Gratuity Act. POGA not covered by POGA. When you will see? When you are a non-government employee. But if you are a government employee, no need to see POGA or not covered by POGA. Whatever death cum retirement gratuity received, fully exempt. Under which section? 1010. But if you are a non-government employee and you are receiving gratuity, why? Because you were covered by POGA, then your gratuity, death cum retirement gratuity, will also be exempt under section 1010. How much? A, actual amount. B, maximum 20. And C, this is the limit given in POGA. Now see, what is this limit? Can you see? 15 by 26. This is 15 by 26 into last drawn salary per month into number of years of service. Now see, listen to me very carefully. The Payment of Gratuity Act says that the employees who are covered by this law, covered by POGA, every employer has to give such employees minimum this much amount as what? Gratuity. 15 days of their last drawn salary should be given for every year of service as what? Gratuity. What? 15 days of their last drawn salary should be given to them for every year of service which they have given to you. Starting from the time when they had joined till today, till the date of retirement. How many years of service the employee has given? For all the years of service, each year of service, he should get 15 days salary. And that 15 days salary should be the last drawn salary. Understanding? Now 15 days salary based on the last drawn salary, meaning that last drawn salary should be divided by 30. Then you will get 1 day salary and multiplied by 15. Then you will get 15 days salary, no? But it is divided by 26 here. Why? Because in a month, no, there are 4 Sundays. So whatever last drawn salary is there, no, that the employee is not getting for 30 days, he is getting it for 26 days. Hello? Because anyways, 4 Sundays he is not coming. So whatever salary you are giving him, this salary is for 26 working days, no? So divided by 26. You will get per day salary. Multiply that by 15. You will get 15 days salary. And that 15 days salary you are supposed to give for every year of his service. This is what POGA says. That this much amount the employer should give as what? Gratuity. So either this much amount or the actual which you have received or maximum 20 lakhs, whichever is lower. Now to calculate this, no, why 26 you understood, no? 4 Sundays excluded. 15 by 30 means, 15 by 26 means 15 days salary, means half month salary. Half month salary excluding 4 Sundays of the month. Now which salary? Which salary? Half month which salary? Last drawn salary. So POGA says whatever salary this employee has received immediately prior to the month of his retirement. So forget the month of retirement. Forget the month of retirement. Prior to that, whatever month was there. If you are retiring in December, forget about December, take November. In the November month, whatever salary this employee was receiving, salary means basic and DA. That is what POGA says. And we are not supposed to apply golden rule over here, which we applied in HRA. HRA was not a limit as per any law. HRA was a limit given in Income Tax Act. Hello. So under the Income Tax Act, whenever we are doing any calculations for salary purpose, we always take salary as what? Basic, DA in terms and turnover commission. Yes or no? Always. But this limit is not as per Income Tax Act. This limit we have brought from POGA. And under the POGA, they are saying that what is salary? Under POGA, they are saying basic and DA is salary. So if I am bringing that limit from POGA, so I have to take this salary as per POGA, no? So as per POGA, what is salary? Basic and DA. That's it. DA, they are saying DA. In terms also you are supposed to take, not in terms also you are supposed to take. Full DA plus basic. Basic plus DA, add them, this is salary. And this salary for the month immediately preceding to month of retirement is known as what? Last drawn salary. Now this last drawn salary is not for 30, it is for 26 days. Divide by 26. You will get per day salary. Multiplied by 15, you will get 15 days, half month salary. And this half month salary based on the latest salary should be given for every year of your service. Every year of service meaning since the date on which you join till today, you have given a service of 19 years and 2 months. Then how many years of service? 19 years full service you have given. 20th year you were giving, but 20th year you cannot give full. 20th year only 2 months you gave the service. Ignore the 20th year. You will get for 19 years. Now 19 years and 9 months you gave service. That means 20th year you gave service for a period of more than 6 months. Then count the entire 20th year also. Fraction of any year service will also be taken as full year of service if that fraction is more than 6 months. If it is 6 or less than 6, fraction will be ignored. Only completed year of service will be taken. Getting my point? This cannot be explained better than this. I am telling you. It cannot be easier than this. And if you remember all these things, trust me, not a single question can put you in trouble. You have to remember all these things. Will you? So what is 15 by 26? You understood? What is last drawn salary? Basic plus DA of the month immediately preceding to month of retirement. Here you will not apply golden rule because this is not the limit which you are saying as per Income Tax Act. This is limit which you are bringing from POGA. Got it? And POGA says your salary should be basic and DA. So I have to take basic plus DA. And years of service means all the number of years service which you have given, all the completed years, you are supposed to get 15 days salary. Even for part of the year of service, you will get full, provided that part of the year is what? More than 6 months. So year of service, 20th year of service. Have you given service for more than 6 months? Yes. Then count the 20th year. But in 20th year, have you given a service for 6 months or less? Yes. Ignore 20th year. You will get only for 19 years. Done? Now, are you covered by POGA? No, not covered by POGA. And still your employer gives you what? Gratuity. Then according to us, you should get maximum this much. According to us. Meaning now according to the Income Tax Act, you should get this much as gratuity. And this limit is told in the Income Tax Act only. Not from any law. So here in this limit, can you see salary? Now tell me, what will you take in this salary? Golden rule. Basic, DA in terms and turnover commission. But this you are not supposed to take for the last month. Huh? No. Because it will be a blunder. Why? Because if we tell you to take last month's salary, what if you and your employer both have manipulated your salary in the last 10 months? And the month immediately preceding to the month of retirement, your salary was highest. So we will spread that amount in 10 months. We will take the average of 10 months. No. So whatever increase which has taken place during these last 10 months gets washed out, gets averaged out. Getting my point? But for that, the salary needs to be taken on average basis. So what you will take? Month of retirement, ignore that month. Immediately prior to that, take 10 months. Basic of last 10 months. DA in terms of last 10 months. Turnover commission of last 10 months. Add, you will get total salary of 10 months. Now divided by 10, you will get average salary of 10 months. Now this average salary is for 30 days. We are not saying exclude 4 Sundays. That is given in POGA. As per Income Tax Act, this is given for Sundays also, no? Sundays also you are getting salary. So this entire salary is not for 26 days. This is for full 30 days in a month. Divide by 30. You will get per day salary multiplied by 15. Now this 15 days salary based on the average salary of last 10 months, you should get for every completed year of service only. Fraction of the year, more than 6 months, less than 6 months, ignore. For every completed year of your service, you should get this 15 days salary as what? Gratuity, according to us. If you are not covered by POGA. Getting it? Everyone? Easy, no? No, made easy. Say thank you. Okay, got it? So, now these three limits you are supposed to remember. Now, can you see 20 lakh rupees is written here? What is the maximum limit? Can you see 20 lakhs? This 20 lakhs is lifetime maximum exemption. What? Lifetime maximum exemption. Meaning that from one employer or more than one employer in the same year if you are getting gratuity. So from all the employers taken together, your exemption cannot be more than 20 lakhs. So this 20 lakhs is the limit of exemption under section 1010 available for gratuity exemption coming from all your employer during your lifetime. Whether in a single year you are getting gratuity from more than one employer. So from all the employers, whatever gratuity you will receive, total exemption cannot be more than 20 lakhs. Hello? Also, you are taking the gratuity exemption in this year. It is possible that prior to this, you were employed somewhere. In your earlier employment also, you might have got gratuity. Hello? Whether you are a government employee, non-government employee, covered by POGA, not covered by POGA, we are not worried about that. Were you receiving gratuity in the past? Yes. Did you take the gratuity exemption in the past? Yes. You received 15 lakhs gratuity and that time you took the exemption of 12 lakhs. And now after working with that employer for few more years, you were working with the current employer. From current employer also you are getting a gratuity now. Can you claim this gratuity exemption for the second time? Yes, you can claim. But wait, now the limit of 20 will not be 20. This will be 20 minus 12 which you have claimed earlier. Now only 8 lakh will be available as your limit. Because in your entire lifetime, you take the exemption of gratuity as many times as you can. From as many employers as you can. But the total exemption available under section 1010 during your entire lifetime cannot be more than 20 lakhs. Understanding? During this year, more than one employer. Then also taken together, all taken together, cannot be more than 20 lakhs. Already taken earlier. So whatever exemption you have taken earlier, now the gratuity which will be coming to you, that can be exempted, but not to the extent of full 20, because out of this 20, some limit is already exhausted earlier when you took the exemption in the past. Getting my point? So that amount you reduce out of your limit and whatever balance remains that you can claim. Sure, this is what exemption under section 1010 amounting to 20 lakhs. This is a lifetime maximum exemption limit. Whenever I write a lifetime maximum exemption limit, you are supposed to understand this thing only. Okay. Now, see note number 2. Please read this part. What does this mean? The gratuity exemption which we discussed just now is available when you shift out of 115 BSc. Can you claim this exemption if you remain in 115 BSc? Yes. If you remain in 115 BSc, still you can claim this exemption. Understood? This is note number 2. Now note number 3. See, gratuity becomes taxable on due or receipt, whichever is earlier basis. But it becomes due. It can become due on the retirement also and on the death also. We'll take 3 examples. Okay, no? First, for example, your employee's retirement date was 30th June 2024. So he was supposed to retire on 30th June 24. Done. And he retired on 30th June 2024. He retired on 30th June 24. So on his retirement, the gratuity became due. And that gratuity he received on 11th of July. So on his retirement, the gratuity became due when in the hands of employee. And on 11th July, this gratuity was given in the hands of employee. But he could not see this much huge amount of money. Out of happiness, he got a heart attack on 20th July and he died. Possible or not possible? He is dying before retirement or after retirement? After retirement. After the gratuity became due on retirement, he is dying. So death is happening after retirement. Retirement is happening first. So his gratuity becomes due on retirement. And even before his death, he is receiving this gratuity also. So gratuity becomes due in his hands on retirement and he is receiving that gratuity also. But unfortunately, after it becomes due, after it is received by him, he dies on 20th of July. Possible? So this gratuity will be taxable in the hands of that employee only because it becomes due as well as it is received in the hands of that employee. So after taking the exemption, whatever gratuity remains, that gratuity will be taxable in the hands of this employee only. On what basis? Due basis. Because due is happening before its receipt. And at both the times the employee was alive. Hello sir. So it will be taxable for whom? Employee only. On what basis? Due basis. Because at the time when it was due, the employee was alive. No need to tax it on receipt basis. Why? Because receipt is happening after and due is happening before. So it will be taxable on due basis. Getting my point? Now second example. He is retiring on 30th June 24. So as on the date of retirement, his gratuity becomes due. He is alive that time. Now, when he retired, no, he was very sad. What will happen for me now? I have retired. I don't have any work. So out of his sorrow, out of his sadness, he died. He could not even wait for gratuity to be received. Even before receiving gratuity, see, he died. But tell me, even before death, on his retirement only the gratuity became due, no? Because when he retired, he retired first and then he died. 30th June he retired and 6th July he died. So this gratuity became due on retirement or on death? Retirement. So whatever gratuity which becomes due on retirement, what did I say? Whatever gratuity which becomes due on retirement will always be charged in the hands of employee after taking the exemption because it is becoming due in his hands. Hello sir. Whether it is received by him or received by his legal year will not make any difference. It becomes due in his hands, will be chargeable in his hands after taking the exemption. Done? Sure. Last case. Gratuity becomes due on death. Because his retirement date was 30th June 2029. He is not going to get retired in this year. He was supposed to get retired on 30th June 2029. But prior to that only, in the current year, he died on 6th July. So this gratuity will become due on his retirement or death, whichever happens earlier. So on his death, the gratuity will become due. So when it is becoming due, is it becoming due in his hands? No. On his death, it is becoming due. Employee is not alive only when the gratuity is due. And neither it is received in his hands. So a gratuity which is neither due in his hands nor received in his hands cannot be taxable for him. So now will it be taxable in the hands of legal years? Because the gratuity will be received on 11th of July by his legal years. Yes or no? Nominees. Will it be taxable for them? No. For them also this gratuity will not be taxable because for them this gratuity is their capital receipt. and such type of capital receipt is income for them and chargeable under the head capital gain, nowhere it is written. Chargeable under the Income Tax Act, nowhere it is written. So for legal years also, this gratuity is not taxable because it is coming on the death of the employee. Got it? Will you remember this? Friends, this was your gratuity. Now one question we'll see on gratuity, then we'll come to know how much we have understood. Okay? Come to one question. Question number 4, if I'm not wrong. Illustration number 4. This is on gratuity. Mr. Ravi retired on 15 June 24 after completion of 26 years and 8 months of service. If I say number of years of service for POGA, then it will be 27 years. But not covered by POGA, only completed years of service. Ignore 8 months, will take only 26 years. Right? Next. Received a gratuity of 15 lakhs. So can I say that this gratuity he is receiving on retirement? This is death cum retirement gratuity. At the time of retirement, his salary was basic salary, dearness allowance given. Out of the dearness allowance, 60% is for retirement benefits. The DA which is used for retirement benefits is DA in terms. Yes or no? And remaining 40% is not in terms, right? No? Next, commission is 1% of turnover, and turnover in the last 12 months, last 10 months, no. Last 12 months turnover they have given. 1 crore 20 lakh. Of that, 1% will be what? Turnover commission. Bonus is given 25,000 per annum. Compute is taxable gratuity. Highlight this. What they want to tell you, what they are asking you to calculate, taxable gratuity. If you will calculate only exemption and give no, your answer is wrong. Take the exemption out of the gratuity and tell us how much gratuity is taxable. They want you to calculate that taxable gratuity. Okay, so pay attention over here. See, what is the name of the assessee? Mr. Ravi. So if I say A, Ravi is a non-government employee plus he is covered by POGA also. Okay. Now gratuity received on retirement is how much? 15 lakhs, no? 15 lakhs? Yes. Less exempt. Under which section the exemption is given? 1010. Remember this section, okay? How much is the exemption? A, actual amount, which is 15 lakhs. B, maximum limit under section 1010. The entire 20 lakh limit is available to him, yes or no? He has not taken exemption earlier. So this 20 lakh he is claiming for the first time. Okay. Now see, limit C. Is he covered by POGA? So I will write POGA limit over here. What was POGA limit? 15 by 26 into last drawn salary per month into years of service. Yes or no? Into number of years of service. Wait, I will have to first calculate the last drawn salary. So last drawn salary will be the month of retirement, ignore that. He is getting retired on 15 June, no, ignore June. Prior to that, May month, how much basic he was getting? Come on, tell me. He was getting a basic of 50,000. And how much DA he was getting? 10,000. In terms also I am supposed to take, not in terms also. Full 10,000 I am supposed to take. So basic plus DA, 60,000. So his last drawn salary is 60,000 per month. So 15 by 26 into 60,000 into years of service I am to take. 26 years, 8 months. Meaning 27th year also he is providing service. In the 27th year, he is providing services for more than 6 months. Yes. Then 27th year will be counted as a full year. Right? Now if you will calculate, you will get 60,000 into 15 into 27 divided by 26, you will get 9,34,615. 9,34,615. Did you calculate the three amounts? Yes. Whichever is lower. And this amount is lower. So exemption under section 1010 will be this much. 9,34,615. And this amount is exempt out of 15 lakhs. Yes or no? So how much will remain now? Minus 15 lakhs. You will get 5,65,500 and 5,65,385. 385. This is the taxable amount of gratuity. This is what they want you to calculate. Everyone got this amount? Sure. Now the second part, same calculation, same thing. What I will do here, I will put a cross mark, not covered by payment of gratuity act, and everything will remain same except for this C part. This will change, and as a result of that, everything will change. Okay, no? So I will do 15 by 30 into average salary per month, okay, into completed years I will take now. So completed years I know 26. I know 15 by 30 also. Now I will have to calculate the average salary. If you calculate this correctly, your answer will be correct. Okay, no? See, average salary is 66,000. Very good, Akshaya. Very good. See, I will take basic of 10 months immediately preceding to month of retirement. So month of retirement is June. Prior to that, 10 months. May, April, March, February, January. So for those 10 months, basic was same only, no? 50, 50, 50, 50. Was there any change in the basic? No. So 50,000 into 10. 50,000 into 10. The basic for last 10 months was 5 lakhs. Now I will have to take DA in terms only. Only in terms DA I will take. So see, 10,000 was my DA. Out of that, 60% was in terms. And last 10 months, 6,000 only I was getting, no? Entire 10, 10, 10, 10 I was getting. So I was getting 6,000 only, no? For the last 10 months. So it will be multiplied by 10. I will get 60,000 what? DA in terms. Now, turnover commission, they are saying that it is 1% of the turnover, which is 1 crore 20 lakhs. Now tell me, this 1 crore 20 lakh is the turnover for the last 12 months. So whatever commission I will get, this will be for 12 months I will get. So I will have to divide it by 12 and multiply by 10. Then only I will get 10 months commission. Getting my point? So this will be, if I am not wrong, this will be 1 lakh rupees. So total will be 6,60,000. Now I will divide by 10. I will get 66,000 per month. This is my average salary. Everyone got this average salary? I will write 66,000 over here. Now please make the calculation. 66,000 into 26 into 15 divide by 30. I will get 8,58,000. 8,58,000. Now tell me, amount which is exempt will be lowest of these three. This is the lowest. 8,58,000. So out of 15, now 8,58,000 will be exempt. How much will be taxable? 6,42,000. This will be taxable amount. Done? Do the same calculation at home. Make the presentation, proper presentation. Amount, particulars, okay, covered by POGA, not covered by POGA, like this. Now, the C part they are saying, Ravi is a government employee. Now, don't see POGA or not POGA. So, can I say gratuity receipt 15 lakhs? I will write less fully exempt under section 1010 15 lakhs. So, what will be the balance amount? Come on, tell me. Nil. Done. Easy or not? Sure? Perfect. Very good. Now, we are through with gratuity concept. Now, the next concept is after gratuity. Can you see pension? See, during the previous year, no, if the employee gets retired, so on retirement, the employer can give him pension also. What is the meaning of pension? Pension means it is a fixed amount given regularly after the employee gets retired. So there might be the contract between the employer and the employee that, okay, your retirement age will be 60 years. After you will get retired, okay, we will give you a pension after your retirement, and the amount of that pension will be 10,000 per month. So that 10,000 per month which the employee will get, it is a fixed amount which he will receive on a regular basis from the employer. And when he will get this amount on a regular basis from the employer after the retirement, so it is because of his services which he gave as an employee only, no? So the services which he gave as an employee, for those services only, after retirement he is getting this pension. So this pension is also a salary. This pension is also a salary for the employee. If you remember the salary definition, 17 subsection 1 says the term salary includes wages, and second point was annuity or pension. So even this pension is a salary for the employee. Now, if it is a salary, how the taxability will be done? If it is a salary, how the taxability will be done? So in order to charge pension, first of all, if fixed amount is given on a regular basis, that means in my example I took 10,000 rupees per month, and that after the retirement. So this will be known as uncommuted pension. Will be fully taxable under the head salary. No exemption for this pension is given. This will be fully taxable in the hands of all types of employees. Whether you are a government employee or a non-government employee will not make any difference. This will be fully taxable. But sometimes what happens that, see, after the retirement, employee will keep on getting 10,000, 10,000, 10,000, 10,000, 10,000, 10,000 every month. Now this might not serve the purpose of the employee, because the employee is in need of some lump sum money. For example, after his retirement, he has planned that he will construct a house for him. Or when he retired, at that time, he has to get his daughter married. So for daughter's marriage, for son's education, for constructing a house, this 10,000 per month will not be sufficient. So what he can do, he will be waiving off, he will be giving away either his entire monthly pension or part of the monthly pension to get a lump sum from the employer. So whatever monthly pension he is receiving, he is supposed to receive, out of this monthly pension, either the full amount, that is entire 10,000, he can waive off, or out of the 10,000, he can waive off 50% also. He can waive off 60% also. He can waive off 40% also. telling the employer that employer, see, this monthly amount which you are giving me now, I want a lump sum amount. Do one thing, I will waive off this monthly amount either fully or in part, but against that give me a lump sum. So whatever amount you will calculate, that amount will be calculated by the employer only. Yes or no? How much he is supposed to get on waiving off. So what he will do, what the employee will do, the monthly amount which he is getting as pension, he will waive off or give up either that monthly amount fully or part of this monthly amount also he can waive off. That okay, employer, I don't want this, give me a lump sum. So to get that lump sum, he is waiving off his monthly pension. To get that lump sum, he is waiving off his monthly pension. Either the monthly pension is fully waived off or even the part of that monthly pension is waived off. Now whatever lump sum he will get, that lump sum is known as commuted pension. What will you call it? Commuted pension. Now this commuted pension, if government employee is receiving, it will be fully exempt under section 1010A. Under which section? 1010A. So as per 1010A, whatever commuted pension is received by the government employee, whatever amount will be fully exempt. Okay. But this commuted pension, if it is received by a non-government employee, will it be exempt? The answer is yes, exemption will be given. But giving the full exemption will be dangerous here also. Getting my point? Just like it was dangerous in gratuity. So it will be dangerous here also. Because God knows what amount the employer will calculate and give as a lump sum. Hello? Getting my point? So giving the full exemption will be dangerous. So wait. We are going to give you the exemption. If you are a non-government employee commuting your monthly pension to get a lump sum, and that lump sum is a commuted pension, that commuted pension will be exempted in your hands, even if you are a non-government employee. Under section 1010A only, you are going to get the exemption. But how much exemption you are going to get depends on the fact that whether you are receiving gratuity on retirement or you are not receiving gratuity on retirement. So were you getting gratuity on retirement? Then your commuted pension will be exempt this much. And were you getting gratuity on retirement? No. Then your commuted pension will be exempt this much. So how much exemption out of your commuted pension you are going to get? Maximum. That maximum limit depends on the fact that on retirement, were you receiving gratuity or you were not receiving gratuity? So first of all, tell me, this lump sum which comes in your hands, this is known as what? Commuted pension. And this commuted pension which you are getting will be exempt. But the fixed amount which you are going to get, if you are not commuting that and you are getting that fixed amount on a regular basis, that is your uncommuted pension, that will be fully taxable whether you are a government employee or a non-government employee. Sure? Sure, no? Now wait, I will discuss that how much pension, commuted pension will be exempted if you are a non-government employee who is receiving gratuity. So if you are a non-government employee receiving gratuity also on retirement, so your commuted pension will be exempt under section 1010A. How much? The amount of commuted pension which you have actually received, either this much or maximum 1/3 of your fully commuted pension. This is the limit. To the extent of this limit only, your commuted pension can be exempted. 1/3 of commuted pension? No, 1/3 of fully commuted pension. First of all, no, understand this thing. With examples, numbers, you will understand this crystal clear. Whatever I am speaking, keep this thing in mind right now. Okay. So if a non-government employee is there who is receiving gratuity also on the retirement, and that non-government employee is receiving what? Commuted pension. His commuted pension will be exempted under section 1010A. How much? The amount of commuted pension which he is actually getting. Either that amount or there is a maximum amount. How much is that maximum amount? 1/3 of his fully commuted pension. Maximum to that extent his commuted pension can be exempted. So if his commuted pension is higher than this maximum amount, so to the extent of this maximum amount it will be exempt, the balance will be taxable. But if his commuted pension is equal to or lower than this amount, then it will be fully exempt. So first you will have to calculate this limit. 1/3 of fully commuted pension you are supposed to calculate. Hello? 1/3 of fully commuted pension you are supposed to calculate. Okay. Now, if that employee, non-government employee, is not receiving gratuity on his retirement, then the exemption is how much? Then they are saying that the actual amount of commuted pension which he is receiving, either that amount or now half of the fully commuted pension, maximum this amount we can give you as exemption. Receiving gratuity, then 1/3. Not receiving gratuity, then half. 1/3 of what? Fully commuted pension. Half of what? Fully commuted pension. Okay. Now let's do some calculations. Then you'll understand. Okay. Wait. See. 10,000 rupees per month pension. Okay. Wait. This is our previous year. Previous year 24-25. So the employee is retiring in 24-25. His date of retirement was, example, 1st of November 2024. This is his DOR, date of retirement. So after he will retire, no? Once he will retire, he will start getting what? Monthly pension of 10,000. So tell me, November, will he receive 10,000? Yes. December, will he receive 10,000? Yes. January, February, March? If he is not commuting anything out of 10,000, if he is not commuting, can I say from November till March, he is going to get 10,000 every month? So 10,000 starting from November till March. How much is the amount? 5 months. November to March. 5 months only, no? November, December, January, February, March. 5 months, 10,000 will be 50,000. That 50,000 is entirely his uncommuted pension, will be fully taxable. Any problem till here? Now what if in the month of January, on 1st of January 2025, on this date, he decided that he wants a lump sum against his monthly pension. Can he take that lump sum from the employer? Yes. So what he did, he went to the employer, he told that out of this 10,000, I am commuting 60%. 60% is commuted for a lump sum of rupees. Example, the lump sum was 3,60,000. How much was the lump sum? 3,60,000. So he's telling his employer that, see, 10,000 which you are giving me, no? Don't give me 10,000. Out of that 10,000, I'm waiving off, I'm giving away 60%. Against that, give me a lump sum amount. So employer said, okay, you forget your 60% of monthly pension. We are going to give you 3,60,000. And this also happened in my previous year. Now tell me, has he entirely commuted his pension or only 60%? That means out of 10,000, 40% is still remaining monthly amount, which is going to get for January also, February also, and March also. So now can I say November and December, 2 months, he did not commute anything, so he was getting 10,000 fully into 2 months, 20,000. 1st January he commuted 60%. So can I say from January to March, he was supposed to get 10,000 only, but since he commuted 60% on what? 1st January. So now he is not going to get entire 10,000. Whatever remains, 40%, only that he will get. So 10,000 into 40%, that is after commuting 60, only 40% he is going to get. For how many months? for 3 months, Jan, Feb and March. So 4,000 into 3 will be 12,000. Can you do the total? 32,000. Friends, this 32,000 is what? Uncommuted pension for this year. Fully taxable. Whether you are a government employee, fully taxable. Non-government employee receiving gratuity, fully taxable. Non-government employee not receiving gratuity, fully taxable. That's it. Sure? Now during this previous year, he is getting some commuted pension also, no? Tell me, full monthly pension commuted or only part of the monthly pension commuted? So this commuted pension is not fully commuted pension, this is partly commuted pension. Now tell me, if he is a government employee and government employee getting this 3,60,000 commuted pension, fully exempt, 360 minus 360, nothing will be taxable. Understanding? But what if he is a non-government employee who is receiving gratuity also on retirement? Will this be fully exempt? No. He will get exemption under 1010A, but the exemption can be commuted pension 3,60,000 or one third of commuted pension. No, one third of fully commuted pension. This is not fully commuted pension. Monthly pension, 60% of that commuted and getting how much? 3,60,000. What if the entire 100% was commuted? How much he would have got? Can you calculate? If on commuting 60% he is getting 3,60,000, if he would have commuted 100%, how much he would have got? Cross multiplication you can do. How much? 6 lakhs. 60% is 3,60,000. How much is 100%? And the 6 lakh, my dear friends, is what? Fully commuted pension. Take one third of this. 2 lakhs. Your commuted pension 3,60,000 or one third limit is 2 lakhs. Whichever is lower. 2 lakh rupees is lower. Maximum 2 lakh you can claim as exempt. How much you are getting? 360. How much is exempt? 2 lakh. How much is taxable? 1,60,000. That's it. Got it? Everyone? But what if this non-government employee was not receiving gratuity? Then for this 6 lakh, you are not going to do one third. For the same 6 lakh, you are supposed to do half, 1 by 2. So 6 lakh divided by 2 will be 3 lakhs. So can I say either 3,60,000 or 3 lakh, whichever is lower, 3 lakh will be exempt. So out of 360, if 3 lakh is exempt, how much is taxable? Only 60,000. Easy or no? Sure, no? So with numbers, we are able to understand few things very clearly. Okay. Now pay attention, pay attention. Can I say he could have commuted 30% and received this much, 360? Can he commute 30% out of 10,000? Can he commute 30%? Yes, he commuted 30%. And by commuting 30%, he got 3,60,000. So now here, he will be receiving how much? He will be receiving balance 70% for 3 months. That is 7,000 into 3 will be 21,000. And now this will become 41,000. Everyone understood? Sure? Now pay attention. He is a non-government employee plus he is receiving gratuity also. So how much will be exempt? Come on, tell me how much? Either 3,60,000 or if he is receiving gratuity, I will have to do one third of fully commuted pension. So now my fully commuted pension will not be 6 lakhs. It will be 3,60,000 divided by 30 into 100. Because I am commuting 30% and getting how much? 3,60,000, no? So now this will be how much? 12 lakhs. So I will do one third of 12 lakhs. That is how much? 4 lakhs. Yes or no? So either 360 or 4 lakh. Whichever is lower. Can I say 3,60,000 is the lower amount? How much commuted pension received? 3,60,000. How much is exempt? 3,60,000. How much is taxable? 0. Got it? But wait. Still some pension is receiving 7,000, 7,000, 7,000 in future. In future, can he again commute? Yes. Once commuted, can he again commute? Yes, whatever balance he is receiving, 7,000, 7,000, out of that also he can again commute, no? What if he is again commuting? Will he again get the exemption in the future? Yes. Now in future, whenever he will claim the exemption under section 1010A, no, that time he will not get a fresh limit of 4 lakhs because out of this 4 lakh, 3,60,000 is exempted right now. So how much limit remaining? 40. So that time his commuted pension will be exempt maximum 40 because this 4 lakh whatever limit is there, 1/3 whatever limit is there, this is lifetime maximum exemption limit. Likewise, you can do the same calculation if he is not receiving gratuity. Come on, tell me. What if he is not receiving gratuity? Then instead of 1/3, now how much will you take? You will take 1/2. Now 1/2 of what? 12 lakh will be how much? 6 lakhs. Yes or no? Now tell me 6 lakh or 3,60,000, whichever is lower. 3,60,000. 3,60,000 exemption you will get. Meaning that 3,60,000 which you are receiving is fully exempt. Anything taxable? No. But now in future, again can you commute? Yes. Now whenever you will commute in future, again you will get 1010A exemption. But that time again fresh 6 lakh limit will not be available. Now only 2,40,000 which remains, no, that will be available. Lifetime maximum exemption. Will you remember this? Sure, everyone. Pay attention. Pay attention. See, I told you, no, here it is 1/3 and here it is half. Receiving gratuity, not receiving gratuity. Non-government employee. Okay, no? Now what is fully commuted pension? Read. I have already explained. It is the amount of commuted pension which the employee would have received if he would have commuted his entire monthly pension. That we are supposed to do cross multiplication. That's it. Okay, no? Whatever I have written, we are doing it by way of cross multiplication. Next, maximum limit of 1/3 or half of the fully commuted pension is lifetime maximum exemption limit. So whenever next time when you will claim the exemption, no, that time, second time exemption, the maximum limit will be reduced by the amount which you have already claimed exempt earlier. Got it? Sure. Pension over. But wait. Pension will always come under the head salary. True or false? Pension will always come under the head salary. True or false? False. Pension given by the employer to employee can only come under the head salary. Employer-employee relationship we don't have to forget. But sometimes the pension can be received on my investments also. Can I invest in government's national pension scheme to get the pension in future? Can I invest in different pension plans of insurance company, mutual funds? Yes or no? They are also having annuity plans, pension plans. So in those pension plans, I'm investing and I'm getting pension. Tell me, those pensions are nothing but return on my investment, no? Are those pensions coming from employer-employee relationship? No. So those pensions will never come under this head. Please remember. Here, you will always take that pension which is coming because of employer-employee relationship for your services which you had rendered to your employer. It is coming from the employer, only then the pension will come here. If the pension is coming from NPS, if it is coming from various, pension plans, annuity plans, then those pensions are nothing but return on your investments. That pension will go to IFOS. And wait. Now can I say pension will either come to salary or it can either go to IFOS? Yes or no? Not necessary. Some pensions are exempt also. So if some pensions which are exempt, no, Don't bring them under salary also. Don't bring them under IFOS also. Because they are exempt only. Now, sir, when are you going to tell all those things to us? Wait, we'll do IFOS chapter. In that IFOS chapter, when I'll be teaching you those pensions which are taxable there, no, along with that, I will teach you the exempt pensions also over there only. But right now, for the salary purpose, only this pension you are bringing. Pension coming from the employer because of employer-employee relationship, either uncommuted or commuted. Got it, everyone? Sure? Let's do one question. Last question which you did was question number 4. Yes or no? Now, start with question number 3. Let's start. Come on. Mr. Sagar, who retired on 1st October 2024, is receiving 5,000 per month as pension. On 1st February 25, he commuted 60% of his pension and received 3 lakh as commuted pension. You are required to compute his taxable pension, assuming he is a government employee, private sector employee receiving gratuity, and he is a private sector employee, did not receive any gratuity at the time of retirement. Okay, very good, easy. For example, he is a government employee. Okay, so government employee or a non-government employee. First of all, what we will do? First of all, we'll calculate his uncommuted pension. Uncommuted pension. Okay. So tell me, how much he was supposed to get? 5,000 per month. His date of retirement was 1st October 2024. So can I say for October, November, December and January, for 4 months he received this 5,000. So 5,000 into 4 months, this is from November to January. Okay, 20,000. Then on 1st February he commuted 60% out of this. So 5,000 which he was supposed to receive for February and March also, which he will not receive now because he has already commuted 60%. So he will get only 40% for February and March, 2 months, Feb and March. So can I say here he will get 4,000? So 20,000 plus 4,000, the amount will be 24,000. Yes or no? Amount will be 24,000. This will be taxable. Now wait, if we assume that he is a government employee, for government employee, this is fully taxable. But he is a government employee getting the commuted pension also, no? So I will have to write down commuted pension, which he took 3 lakh rupees. Now out of that, he will get the exemption under section 1010A. How much? Full 3 lakhs. Full exemption for commuted pension. Yes or no? So how much will be taxable? Nil. So here total taxable pension for him, if he is a government employee, is 24,000 only. Only the uncommuted part. Any problem till here? Now what I will do? Wait. I will copy this part and I will paste it. Now what changes I will do? Come on. Please pay attention. I will write down non-government employee plus he is receiving gratuity also. So will it affect my uncommuted pension or it will remain same? It will remain same. It is going to affect this amount. Getting my point? Now I am not going to get full exemption. Now the exemption will be A, either the commuted pension amount, or B, maximum one third of fully commuted pension. So if 3 lakh is received by commuting 60%, how much he will receive on commuting 100%? 5 lakhs. 5 lakhs divided by 3, he is going to get how much? 1,66,667. 166,667. Done? So either this amount or 3 lakh, whichever is lower, he is going to get the exemption of 166,667. So out of 3 lakhs, if this amount is exempt, how much is taxable, friends? 1,33,300. 333 plus 24,000 will give me 1,57,333. This is the taxable pension for him. Yes or no? Now the same thing I will copy. Same thing I will copy. See, copy and next page I will paste. Okay. See, what changes I will make now? Come on. Now he is not receiving gratuity. So this 1/3 will not be calculated. Only half will be calculated. So this amount will change. Okay, no? So now he is not receiving gratuity. Now instead of 1/3, I will do half. Half of fully commuted pension will be how much? 2,50,000. So 3 lakh or 2,50,000, whichever is lower, 2,50,000. So can I say out of 3 lakh, 2,50,000 will be exempted. So how much will be taxable? 50,000 will be taxable. 50 plus 24 will give me 74,000. This is the total taxable pension. Did you check the answers? Same answer? Easy? Difficult? Very easy. Okay. Let's move to the next part. Now this is leave encashment. Okay. Pay a little bit attention. It is a little bit, big as compared to the pension. Not difficult, easy, very easy. Okay. But you have to pay a little bit attention over here. See, how many days are there in a year? Come on, tell me. How many days are there in a year? 365 days are there. Out of 365 days, 52 Sundays are gone. No employee will go on a Sunday to work. Sunday is a public holiday. Right now? So reduce this 52, you will get 313 days. Now, Diwali is there, Pongal is there, then Holi is there, Raksha Bandhan is there, 26th January is there, 15th August is there. These are known as national holidays, public holidays, right? So, for example, 13 days in a year are public holidays. So, if you reduce 300 days are known as working days in a year. Can your employer expect you to come for these 300 days? No. If he is expecting that you come for these 300 working days, then his expectation will never be fulfilled. Why? Relatives' marriage, some social get-together, functions are there. Sometimes you will fall ill. Okay. Too much of pain in my stomach. Headache is there, sir, today. Today it's raining very hard. All the roads are flooded. I cannot come to the office. There are many reasons because of that. Okay. You cannot go to the office. You would require some extra leaves. So these are the public holidays, statutorily given. Everyone gets it. But can your employer still expect you to come for these 3 days? No, never. Even your employer knows that you cannot, practically you cannot come for these 300 days. So your employer allows few leaves to you. So out of 300 working days, the days remaining for work, on these days, actually the work can be done. Yes or no? Out of these working days, the employer allows some leaves. Leaves allowed by the employer. Now the leaves which are allowed by the employer, no, these are allowed as per the employment terms. There will be a contract between you and the employer. In that contract only it will be written that from my side you are going to get these many number of days leave. Meaning that even if you don't come for these days, still you are going to get the salary for these days. Yes or no? Your salary will not be deducted. You are still going to get the salary of these days. Now, some employer can give 15 days from his side because according to him, 15 days are enough. Some employer can give 25 days. Some employer might give you 30 days. Some employer might give you 45, 60 days. Depends on employer to employer, right? So right now your employer is me. I think that in a year, I should give you 45 days leave. So from my side, in my contract, I have written that I am going to give you how many days leave? 45 days leave. That 45 days allowed by the employer. Meaning that even if you don't come for these 45 days, no, your salary for these 45 days still you are going to get. Don't come and take the salary. Don't come and take the salary for these 45 days. These are known as paid leaves. What do you call it? Paid leaves. Have you heard about this? Sure. What if you fully take 45 days? You will get full salary for 300 days. Full year salary you are supposed to get. Yes or no? No salary deduction. Now what if you take more leaves? 45 days salary you are going to get. But the extra days leave which you have taken, for example, you took 50 days leave. 5 days extra you took. Those 5 days extra which you took, no, for that you are not going to get any salary. That salary will be deducted. So after deducting that amount only, whatever salary comes to you, that is going to be taxed. So that is not leave salary. Getting my point? These 45 days, you are taking 45 days leave and you are still getting the salary for the full year, nothing doing. Now the thing which I want to tell you is important. 45 days allowed by the employer. You took only 30 days. Can I say 30 days is what? Leave taken or leave availed by employee. Employee is taking 30 days leave only. Meaning that 15 days legitimate leave, paid leaves, you are going and working. Even if you are not going for these 15 days, you are going to get the salary for these 15 days, yes or no? So you saved these 15 days, yes or no? This will lapse. You will not get any benefit for this. Employer can tell you this. Hello? Are you going to get any benefit for this 15 days? No. Lapse. Who told you to save this 15 days? That means your employer wants you to take full 45 days. And any day which you save out of 45 days, no, for those days you are not going to get any benefit. Those leaves will lapse. From next year, again 45 days. Now be careful, take the full 45 days leave. Otherwise, whatever leave you will save, no, for that you are not going to get any benefit. Understanding or not? So this case is not important for us. If the leaves saved by you are lapsed, this is not relevant for us. What is relevant? See, for these 15 days, even if you did not come, were you eligible to get the salary of these 15 days? Take that 15 days salary extra. That 15 days which you are saving, no, out of the leave allowed, whatever leaves you are saving, that is leave credit. Leave allowed minus leave taken is leave saved. Nothing but leave credit. After the year end, whatever leaves are there in your credit for these leaves, anyways the employer was going to pay you salary if you don't come. So for these number of days, extra salary is given to you. These leaves are encashed while you are in service only. Getting my point? So your employer can follow this practice that, okay, in the year end we will sit together. How many leaves I have allowed? 45 days. How many leaves you took? 30. Okay, reduce. 15 days remaining. Take the 15 days salary extra. Go away. So your leaves which you have saved are encashed. This is known as leave salary or leave encashment. Got it? When are you getting this? While you are working. While you are in service. Yes or no? Now next year what will happen? Again 45 days, new 45 days, fresh 45 days leave will be given. Now out of that, you took 40 days leave next year. How many leaves you saved? 5 days? For that 5 days, encashment will happen in the next year. Every year, take the encashment of the leaves which you are saving. This can be the practice of your employer. Or, now the employer can tell you how many leaves you saved this year? 15. Next year also you will save something. Next to next year also you will save something. Do one thing, keep on saving your leaves. Keep on accumulating your leaves. Now when you will retire, no, after 10 years, 20 years, 30 years, that time will sit at once. Whatever leaves you have saved throughout your service period, for all those leaves, just imagine how many number of days, how many number of months the leaves will be saved. For all those number of days leaves, the employer will give you one-time encashment. But that encashment will happen at the time of your retirement, separation, or a death, whichever happens earlier. When you leave, at that time we'll calculate. Or when you will retire, at that time we'll calculate. Or if you die, at that time I will calculate and give it to your nominees. Getting my point? Just like your gratuity, retirement or death, whichever happens earlier, at that time the total number of leaves accumulated, for that the leave encashment will become due, not every year. So that leave encashment you are going to get at the time of retirement or separation. What will be the tax treatment? Whatever leave encashment you are getting for the leaves at the time of retirement or death, which as the case may be, yes or no, fully exempt. 1010 AA, fully exempt if you are a government employee. But what if you are a non-government employee? Exemption will be under section 1010 AA, but that exemption will be limited. A, B, C and D, whichever is lower. 4 limits are there. Understanding? So tell me, now 15 days encashed in the same year, then leave encashment while in service. 15 days, encashment not becoming due right now. Every year leaves will be accumulated and encashment will be done at once at the time of death or retirement, whichever happens earlier. So that time when the retirement, at the time of retirement, the leave salary becomes due. What will be the tax treatment of that leave salary? Will it be taxable at that time or it will be exempt? Don't you think that will be a very big amount which you will receive at that time? And just imagine that accumulated leaves, for that right now you will get 15 days salary based on current year salary. Next year 5 days you saved, for those 5 days you will get 5 days salary on the basis of next year's salary. Just imagine after 30 years, will your salary be same or it will be very high? Very high. Because every year you will keep on getting the increments, no? So at that time, whatever will be the salary, at that salary rate, you will be given encashment. Just imagine how much huge amount of encashment you will get at that time. Getting my point? And you don't get such kind of encashments every now and then. It is a capital receipt. And if that amount gets taxed in that year, it will be very burdensome for the employee. So employee, do one thing, take the exemption from us. Full amount exempt if you are a government employee. But limited amount exempt if you are a non-government employee receiving leave encashment on retirement. Got it? Sure? So should we check the limits now? Please pay attention. See, now the leave encashment. By the way, leave encashment is your salary. Huh? If you remember the definition of salary. Salary as per 17.1 definition includes wages, annuity pension, gratuity. Point number 4, fees, commission, perquisite, profit in lieu of salary. 5th point, advance salary. And 6th point was leave encashment. 6th point was leave salary. This is also known as leave salary. Salary which is given for the leave period is known as leave salary, also known as leave encashment. Yes or no? So this is your salary as per 17.1. And now this salary will be fully taxable if it is given while you are in service. Whether you are a government employee or a non-government employee will not make any difference. If you are receiving this while you are in service, it will be fully taxable. So when the encashment happens every year while you are in service, that time it is fully taxable, as good as your salary. Now, if this leave encashment becomes due on retirement or death, whichever is earlier. So just like death come retirement gratuity was there, no? This is death come retirement leave salary. Got it? So, if you are a government employee getting the leave encashment on retirement, it will be fully exempt. 1010 AA. If you are a non-government employee getting leave encashment on retirement, it will be exempt under section 1010 AA only. A, B, C, D, whichever is lower. What did I say? A, B, C, D, whichever is lower. Come on, tell me. Whichever is lower means actual amount. First, everywhere we are supposed to, whenever we are trying to calculate the exemption, no, first amount will be actual amount only. B. B is maximum limit. Maximum exemption for leave salary for non-government employees is 25 lakhs. 2 years back, it was 3 lakhs only. And the limit was supposed to be, that 3 lakh limit was very old limit. So they updated that limit 2 years back and it is made 25 lakhs. Yes or no? So this 25 lakhs is the maximum amount. Next one, 10 months salary. 10 months salary immediately prior to your retirement, date of retirement, whatever was the 10 month salary, that 10 month salary you are supposed to take. Either that 10 month salary or average salary per month into leave credit. Meaning, for the leave credit, whatever leave encashment you are getting, on the basis of average salary we will calculate. Not on the basis of last drawn salary, because last drawn salary can be manipulated. So take the average of the last 10 months, just like the way in which you were taking for not covered by POGA. Do you remember basic DA in terms turnover commission of 10 months divided by 10? You are supposed to do the same thing here, because this is not the limit coming from any law. This is the limit as per Income Tax Act only. And under the Income Tax Act, if they are telling you to calculate salary for some purpose, so that salary will always be basic DA in terms and turnover commission only. Yes or no? Golden rule. But wait. This is basic DA in terms turnover commission for how many months? 10 months. Which 10 months? Immediately prior to date of retirement. In not covered by POGA, no, we ignored the month of retirement only. 10 months immediately prior to month of retirement we used to take. Here your month of retirement will also be included, because they are telling you to take the average salary of those 10 months, the 10 months immediately preceding to date of retirement they are saying. So for example, your date of retirement is 1st of December. So 10 months prior to 1st December will end on 30th November. So take the salary of November, October, September, likewise. Okay. What if your date of retirement is 31st December? Take the entire December month. Because prior to date of retirement 10 months they are telling. So take the entire December month and then 9 months prior to that. But what if your retirement is happening on 16th of December? Then 16th of December, 10 months immediately prior to 16th December. That means 10 month ending on 15th December. So 15 days of December, 9 months prior to that and 15 days prior to that. That way you will get 10 months. Getting my point? What if you are retiring on 7th of December? So take 7 days of December. Prior to that 9 months. And prior to that take 23 days. So that 10 months are calculated. And in not covered by POGA, we used to calculate the same average. But we used to ignore the month of retirement. Whenever you are retired, no, ignore that month. 10 months immediately prior to that month which we were taking there. Here, it is not 10 months immediately prior to month of retirement. It is 10 months immediately prior to date of retirement. Be careful here. Otherwise, this is same only. Hello? Everyone. Now see, this average salary no is for the 10 months immediately preceding to date of retirement. So, you're averaging any manipulation in the salary happened during these 10 months. This will be averaged out. Manipulations, yes or no? So hence it is average. Second, they are telling you to take the leave credit. How will you calculate this leave credit? Every year, leave allowed minus leave taken, leave credit. Second year, leave allowed minus leave taken, leave credit. For all the years of your service, whatever leaves you have saved, take the total of that. That is total leave credit at the time of retirement. Divide it by 30, you will get leave credit in months. Because average salary per month is there, no? So leave credit should also be there in months. Getting my point? So how will you calculate this? Please pay attention. Huh? Please pay attention. Very important discussion. See, employer's rules. As per employer's rules, you will take leave allowed. Tell me, in my example, how many days leave I was giving you? 45 days, no? So it can be 45 also, it can be 25 also, it can be 60 also, any days which the employer is allowing as per its own rules. Yes or no? So those number of days you take here. For example, we took how many? 45 days. So I'll write 45 here. Okay? 45 days. Now this leave was allowed for every year of your service. So tell me how many years of service you gave to the employer prior to your retirement. For every year you are getting 45 days. Yes or no? So multiply those number of years, number of completed years. Always multiply completed years only, because for every completed year, for 1 year of service you are getting this. Okay, for fraction of the year of service you don't know how many leaves should be given. So ignore the fraction of the year of service. Yes or no? Only count completed years. So for example, you completed 20 years of service. How many years? 20. So we'll multiply 20 years over here. So every year you were getting a leave of 45 days, 45, 45, 45, 45. So in your 20 years, how many leaves the employer allowed you? 900 days leave he allowed. Can I say this is total leaves allowed by the employer during your 20 years tenure? Now during your 20 years tenure, first year you took this much leave, second year you took this much leave, leaves taken. So in your 20 years, how many total leaves you have taken? That you reduce. So reduce total leaves taken. For example, total leaves taken was 480 days. How many days? 480 days. Example, huh? So how many leaves still remaining? That is leave to the credit of the employee at the time of retirement. So during 20 years, employer gave you 900 days leave. How many leaves you took? You took only 480. So during this 20 years, how many total leaves you saved? What was the total leaves accumulated at the time of retirement? That is leave credit. Getting my point? That was 420 days. Now see, since we are multiplying average salary per month with leave credit, no. So this leave credit in days will not be used in that limit. So what you are supposed to do? You are supposed to divide it by 30. You are supposed to convert it into months. So to convert days into months, we divide by 30, no? So divide by 30, how many? 14 months you will get. Can I say this is your leave credit? Now this leave credit you have calculated in months. Okay. Now whenever you will retire, no, your employer will say how many leaves you have saved? 14 months. So you are actually going to get salary based on retirement time. At the time of retirement, whatever was your salary, based on that salary, for these 14 months, you will be paid what? Leave salary. So leave salary actually coming in your hands is for 14 months. Actual leave salary coming in your hands is 14 months based on your latest salary. But see, your latest salary will take average of 10 months. And wait, if salary can be manipulated, hence we took average salary to eliminate the manipulations in the salary happened in the last 10 months. Manipulation can be done here also. Leave credit. Tell me, this 14 months leave credit is calculated on the basis of 45 days. If this same 14 months is taken for the purpose of calculating the exemption, this can be very well, this can also be manipulated. What if you tell your employer to make it 60 days. 60 into 20, 1200. 1200 minus 480. So 1200 minus 480 will give you 720. So 720 divided by 30. You will get 24 months over here. Just by telling your employer to allow more leaves instead of 45, give me 60 days leave. Even you know that I will not take 60 days leave. If you will give me more leaves in the employment contract, I will take less leaves, so that the leaves which I will save every year will be very high, very high, very high. And on the basis of that, my leave credit will be very high. If high leave credit will be there, I will be getting higher what? Leave salary, which can be exempted also, because the same is taken by the government for exemption. What do you think? Government is mad. Government does not know that you can manipulate this. So government said in income tax rules, as per income tax rules, a maximum leave which the employer can allow can be 30 days. So in order to calculate the exemption, leave credit has to be taken. So the leave credit calculated at the rate of 30 days or less is okay. But any leave credit calculated at more than 30 days is not okay. Getting my point? Because IT rule says that an employer can give maximum 30. If he is giving more than 30, that means he is trying to give the taxable salary in the form of what? Leave salary. So let him give taxable salary in the form of leave salary, but we will not take the leave credit as per employer's rules for the purpose of what? Exemption. We will take the leave credit as per 30 days or the employer's rule, whichever is lower. Because it is possible that employer's rule might say 30 or less also. Hello? But what if employer's rule say more than 30? Then there is a restriction on the leave credit, because maximum leave allowed as per IT rules is what? 30 days. So now the same calculation I have to do as per 30 days also. This 30 days would have been allowed for 20 years. So for 20 years, how many days leave you would have got from your employer? 900? No. Now it would have been 600 days. Out of that, you took how many days leave? For 480. This will not change. Okay, no? Now tell me, 120 days. Now if you divide it by 30, no? Now you will get 4 months. Now tell me, this is the leave credit calculated as per IT rules. This is leave credit calculated as per employer's rule. Whichever is lower. So you will be actually getting the leave salary for 14 months. But for the purpose of calculating exemption, we are not going to take 14 months. We are going to take 14 months or 4 months, whichever is lower. Hello, sir. Understanding? So tell me here. Can you see this exemption? What is limit A? Tell me. Limit A is actual amount. Any problem? No problem. Whatever actual leave salary you have received, write it down. Limit B is maximum 25 lakhs. You have to remember this limit. Limit C is 10 months salary. How will you calculate 10 months salary? Have you calculated average salary? Have you calculated average salary? Yes, multiply by 10. You will get 10 months salary. So there will not be any problem in limit C also, because you are anyways going to calculate average salary for 10 months. Multiply that again by 10. You will get 10 months salary prior to date of retirement. Yes or no? So this limit also will be easily calculated. Average salary calculation. You know now what is to be taken as average salary. Hello? Now multiply this average salary with leave credit. What leave credit? Actual leave credit, which is calculated as per employer's rules. No, actual leave credit calculated as per employer's rule, or leave credit calculated as per maximum 30 days of IT rules. Whichever is lower will be taken for the purpose of exemption, because this can be manipulated. Done? So what you will do? You will do the same calculation which I showed. Please check. You will take how many leaves allowed multiplied by number of completed years. Then you will get total leaves allowed, total leaves minus total leaves taken. You will get leave credit divided by 30. You will get leave credit in months. Whichever is lower will be used as leave credit for the purpose of exemption. Now tell me, should I ask you one thing? IT rules maximum is how much? IT rules maximum is 30 days. So on the basis of 30 days, this 4 months is there. What if your employer is also giving 30 days? So this will also come 4 months, no? So no need to do two calculation, do one calculation only. Hello? What if your employer gives 25 days only? So definitely on the basis of 25 days of employer, here the leave credit will be lower than 4 months only, no? So if your employer is allowing 30 days or less, calculate the leave credit as per employer's rule. You will get the leave salary for those many leave credits, yes or no? And the exemption will also be calculated on the basis of same leave credit. But what if your employer is giving you more than 30 days leave? Then your employer will give you leave salary on the basis of this leave credit. You are going to actually get the leave salary. But for exemption, this will not be applicable. For exemption, this will be applicable. Got it, everyone? Easy? Sure? So this was the only tricky part in this calculation. Now wait. Don't do a shortcut over here. Sir, what I'll do? This 45 days, this 30 days, whichever is lower, no? Directly I'll make the calculation as for 30 days, no? I'll directly get 4 months. If you will try to save your time like this, you will be badly stuck somewhere. Because, see, in the exam, no, they will tell you that employee is having 14 months leave. Listen to me very carefully how the question will be framed. The leave credit as per the employer's rules is 14 months, which is calculated on the basis of 45 days leave allowed. You know that it is calculated on the basis of 45 days leave allowed, yes or no? So this has to be higher as compared to IT rules. But now to calculate IT rules leave credit, no, you need this amount, which is missing. So for that, you will have to do the reverse calculation, find out this amount, then you will put it here, then you will get this. This amount will only be missing. So if it is missing here, it will be missing here. So you will not get this. And if you will not get this, you will not get this. Getting my point? So what they are saying? That leave to your credit is 14 months only, which is calculated on the basis of employer's rule, which says that you are going to get 45 days. So you know employer is giving you 45 days for every completed year. And based on that only, the leave credit is 14 months right now. Hello? So you will definitely know by doing a reverse calculation. See, on the basis of 45 days, for 20 years, 900 days should be there. Okay, 900 days should be there. And they are saying that 420 days are at your credit at the time of retirement. Meaning that how much leave you have actually taken. This will be the balancing figure, 480. Now just to calculate this balancing figure, you have to do the entire calculation. Now this 480 you will put in the second part here. Then only you will get 120 over here. Divide by 30. Then only you will get 4 months. Then only you can compare, no? So always do these two calculations. It will not take more than 10 seconds. But it will save you from getting stuck. Don't apply your brains. If there is a shortcut, I will definitely tell you that use the shortcut. Don't worry. You can use the shortcut if the employer says, if the question says that the leave allowed by employer was 25 days. Use the shortcut. Don't make the second calculation. Because anyways, this leave credit will be lower than 30 days only. Hello? If the question says that employer was also giving you 30 days, then also don't make the second calculation. If the question says that employer was giving you more, then also don't calculate. Hello? Provided all the details are given, including this detail. Yes or no? But if this detail is missing, no, you'll have to do the entire calculation again, full, both the things. Then only you will get this and you will compare. Got it, everyone? Sure? Okay. Now pay attention. Now this 25 lakhs maximum exemption limit is there. Can I write down LTME here? This is also lifetime maximum exemption. So in your entire life, how many times you can claim the exemption under section 1010A AA? As many times as you want. But total exemption in your lifetime cannot be more than 25 lakhs. So for example, if earlier you have taken the exemption under 1010 AA, now your limit will not be 25 lakhs. Your limit will be reduced by that amount which you already exempted under section 1010 AA. Hello. This is also lifetime maximum exemption. Yes or no? Now, did I explain this type of thing in what? Gratuity. Same table I explained, no? Same table I took here also. Same table. Copy paste. I just changed this. There I wrote gratuity. Here I am writing leave encashment. Every damn single thing is same. Even the dates are same. You can check. Hello? Understood? This is the end of leave salary. Okay. Now we'll solve one question on leave salary. We'll come to know that how much we have understood. Okay. Come to question number 5. Come to question number 5. Mr. Gupta retired on 1st December 2024 after 20 years of service and received a leave salary of rupees 5 lakh. Other details of his salary income are given. See, whatever details are given, no, this much salary he was receiving prior to his retirement. So when he got retired, at the time of retirement, he is getting this much salary. So basic 5,000 he is getting right now, which was increased 1,000 in the month of April. After increasing 1,000 in April, it became 5,000, 5,000, 5,000, 5,000, which he is receiving right now. So prior to April, his basic was not 5,000, it was 4,000 only. Understanding? This was the only catch. So last 10 months, what was the basic which I was receiving? At the time of retirement, I am receiving 5,000, 5,000, 5,000, 5,000, 5,000. But they are saying that basic was something else which was increased by 1,000 and then it became 5,000, no? Which you are receiving right now. Meaning that basic prior to 1st April 2024 was not 5,000, it was 4 only. 4 increased by 1 became 5 and which you are receiving since April till the date of your retirement. So last 10 months prior to the date of retirement. Can I say November? November, October, September, likewise April to November, 8 months, your salary was 5,000 basic. And and basic prior to that for the month of March as well as February. Because I will have to take from February till November, 10 months. Hello. So basic was, come on, tell me, did you understand? So basic salary 4,000 into 2 for February and March plus 5,000 into 8 from April to November, and that will give me 48,000. Now tell me, during the last 10 months the DA did not change. DA remained 3,000 only. Out of that only 60% is in terms, meaning that 1,800 during the last 10 months you have received as DA in terms. 1800 multiplied by 10 will give you 18,000. Hello sir. 18,000 how did you get? Understood now? Next one. Commission they have given. Sir, they did not say that commission is what? Turnover commission or fixed commission. So we assume that it is a turnover commission. Your assumption can take you nowhere. Because if this is per month commission, every month the commission amount is 500, 500, 500, 500. No. So if the amount of commission is not changing every month, it is a fixed commission. No need to say also that it is fixed. Per month return, it is an indication that it is a fixed commission, not a turnover commission. And if you have taken this commission in the calculations, you are wrong, gone. There is no turnover commission, only fixed commission is there. Then you are getting bonus also. Leave availed during the service is how many? How many days? 480 days. And your employer was giving you 30 days leave every year. Leave entitlement means employer was giving 30 days every year. So as per employer's rule, 30 days is there. Hello. As per IT rules also 30 days is there. Whatever leave credit will come in both the case will be same only, no? No need to make two calculations, make one calculation only. So can I say for every year you are getting 30, so 20 years of service into 20 years, total was 600 days. And out of 600, when you reduce 480, you will get 120 days. Now divide it by 30. Can I say 4 months leave credit is there? This 4 months leave credit will be used for the purpose of exemption. And by the way, for these 4 months only, you are receiving leave salary also. Got it? Now tell me, average salary can you calculate? Basic is 48,000, DA in terms is 18,000, no turnover commission. So it is 66,000. 66,000 divided by 10, you will get average salary 6,600 per month. Yes or no? Average salary done and leave credit also done. You will be very well be able to calculate the exemption now. Now wait, if you are a government employee, what will be your taxable leave salary? It will be 5 lakh minus 5 lakh, it will be nil. Okay, no? Taxable leave salary will be nil. But if you are a non-government employee, I will have to take 4 limits. A, actual amount 5 lakhs. B, maximum limit which is 25 lakhs. Now C, I will take 10 months salary. 10 months salary meaning 10 months into average salary will be 10 months salary. That will be 66,000. And limit D will be leave credit multiplied by average salary. Come on, tell me, 26,400. Are you getting 26,400? Everyone. Now, which is the lowest one? 26,400 is lowest. And out of 5 lakhs, if you are a non-government employee getting 5 lakhs, so your exemption is not full exemption. For you, exemption is only 26,400. So how much will be taxable in that case? 5 lakhs minus 26,400, you will get 473,600. This will be the taxable leave salary for you if you are a non-government employee. Understood everyone? Easy or difficult? Difficult. This was difficult. And where you committed mistake, you know. Will you commit that mistake again? Sure? Okay, perfect. So this was the end of leave salary, pension and gratuity. We did few questions also to understand these concepts. Now see the questions, the type of questions which we did, those type of questions are not going to come in the exams. That was just for the sake of practicing that how we have learned it and how the application of this concept will be done. Yes or no? In the main question, no, only a part of that will come as an adjustment. So that we are going to see when solving the main question, in the main question, how to tackle all these things. Getting my point? And after taking this amount in the main question, how the main question will also be solved. That we are going to see later on. But for retirement benefits, See, Provident Fund and ASAF, Approved Superannuation Fund, these two concepts will be taken at the end of the lecture. End of salaries lecture. Yes or no? Then we are supposed to do two more things, VRS compensation and retrenchment compensation, that we are going to start tomorrow. So VRS compensation, retrenchment compensation done. Assume that the retirement benefits are done. Then immediately after that, we are going to start perquisites tomorrow. That is the only part which will remain now. And once we are through with perquisites now, understand the salary chapter is done and dusted. So tomorrow, major chunk of perquisites, meaning the big perquisites, we are supposed to do them tomorrow. Okay. So tomorrow we are meeting and we will be meeting for the perquisites and the balance part. And VRS compensation and retrenchment compensation also we are going to do tomorrow. Okay. So tomorrow will be the same time. Tomorrow we are meeting at 4. Okay. Bye bye everyone. Take care.